You're on mute.
Yeah.
There you are.
So the first pick is Exide Industries. In the last few days, we have seen this battery stocks doing really well. And if you look at Exide Industries, the long-term and as well as the medium-term charts are very positive. On the monthly charts, we are seeing a higher top, higher bottom formation for the last 4 months. And if we just drill down to a shorter time frame on a daily charts, last 10-12 days, we had seen consolidation in Exide between 310 and 325. And yesterday, we saw a breakout of that consolidation. And the stock is sustaining above its 10 as well as 20-day exponential moving average, which largely represents short-term momentum. So on this front, what we feel is that from the current levels, Exide Industries can be bought with a stop loss of 326 for a target of 355, 360 on the upside. The second pick would be L&T Finance. Now, if you look at the charts of L&T Finance in the last 15 to 16 sessions, the stock was doing nothing. Actually, it was trading in a range between 160 and 170. Yesterday, we have seen a breakout of that consolidation range where the weekly as well as the monthly charts are very strong, and this is trading above all its important moving averages. And we have seen some substantial long built up in terms of open interest also in L&T Finance. So we feel that this stock could be bought at the current levels with 169 as a stop loss and 182 as a target on the upside.
Okay, now some stocks, and we're seeing some movements. So Paytm, for example, is down and out in the session right now. Look at that stock. The pre-open session still not settled, just early days, but 20% lower. Should mark Shree Cement, should mark some of the others which may have moved, Mankind Pharma, Ajanta Pharma. I think we'll see some serious movements in some of these stocks. Andrew Holland is with us as well, CEO of Indus Capital Public Markets. Andrew, while the budget is the big story, we can't take our eyes away from 197 Communications or Paytm. It's a sharp downtake and an action which not too many people would have thought would happen so soon has happened as well. What do you make of this? What does it mean for shareholders of Paytm?
It's difficult to say on this one, Niraj. I think there's a conference call this afternoon, and I think we'll get more clarity then. So I think until I hear what the management has to say, I think we're all kind of firing in the dark. Yeah. Yes, from what the RBI have said, it looks dire, but I don't know what they can do about it. So let's hear from the management first. I think we've seen one side of the story. Let's hear the other side.
Fair call. And yeah, Andrew, we'll get the big picture too, but just that at the start when a stock like Paytm, so much in news, down 20%, want to pay cognizance that. Chakri, can I get you in on this as well? Because this will be the big talking point, and we're going to talk about the budget, we're going to talk about earnings as well. But do you have thoughts on what does somebody who's an existing shareholder of Paytm think about this whole issue, and what could it mean going ahead?
Indeed, Neeraj, I think, the concerns for Paytm have been building up over the last several months, and on this issue, which is now this issue is unlikely to go away anytime soon from the way RBI circulars have come out one after the other. And in a business which is largely a pass-through business, which Paytm's business model is, third-party businesses could dry up very quickly, and that impact, and therefore the volumes that Paytm enjoys can get hurt until there is clarity and also probably beyond. So for existing shareholders, clearly it's a tough place to be in, and clearly to remain on the sidelines for anybody thinking of, I would stay on the sidelines for the stock.
Right. Andrew, of course, we talked about Paytm with you, but change gears. Let's talk about the budget. How important is this event going to be? Let's not forget it's a vote of account, and let's not forget that the markets usually either discount this or move on very quickly post the event. How much significance are you giving this budget as an investor?
I mean, as long as there's no surprises, obviously negative surprises, positive surprises markets always like anyway. So, as long as it's more of the same, the direction's the same, I think the market will be okay. But I think that quickly thereafter we'll go back to, more global as well as local kind of factors which will drive the market. earnings season hasn't been as blockbuster as I think most of us were hoping for. It's been okay, but nothing great. And obviously, with the Fed saying what they said last night, interest rates are not likely to come down so quickly. Getting that Goldilocks scenario, the markets have been looking forward to, not just here but globally as well.
All right. So interesting morning. Paytm, of course, being punished. We talked about how that would be one stock to stay away from. There's a conference call with the management 3:30 this evening, and maybe some clarity there. Meanwhile, look at what's really moving pre-market. Dixon Tech about 3.5% up in your pre-open session. So is Mankind Pharma, a good set of numbers over there. Shriram Finance, meanwhile, doing quite poorly, as is Max Health and Jubilant Food. So you're seeing quite a bit of play over here. I want to come quickly to Sudeep on Dixon. Decent numbers, good numbers, as well as a policy push with import duties on certain mobile components getting cut. Any views there on Dixon? And I reckon, what would you say on Paytm, if anything, Sudeep?
Let's start with Dixon first. Now, if you see Dixon, the charts in the last 7 to 8 months have been consistently constructive, and that's quite positive. Now, Dixon, if we all know, in the last, since November 2021 till Feb 2023, it was on a continuous downtrend from 6,000 to 2,500 levels. And it in the last 1.5 years, it has changed its gears, and now the charts have, if you see the monthly charts, a lot of higher top, higher bottom formations, as well as in the last 1 month, we have seen some consolidation, and post that these good numbers are leading to a gap up, and we feel that right now the stock is in a complete uptrend, and any dips towards 6,000, 6,050 zone should be bought with a 5,900 stop loss, and we feel that very soon this stock could hit a new all-time high. And so if you see around 6,400 could be the first level, and then the levels of 6,700 could be achieved. So overall, we are quite positive on this stock. And if you look at Paytm now, it's a complete contrast chart, and since the listing times, we have seen the stock completely plummeting. In between, we have seen some kind of a rebound, but even in that rebound, the stock has never recovered more than 38 to 40% of the entire fall from listing. So overall, it's in a downtrend, and today's move is reaffirming that. And I feel investors or traders should completely stay away from these kind of names or trying to bottom fish here. But if investors are stuck, any rises post today's the circuit opening or in the next few days should be used to exit this counter.
Right. Andrew, I'll come to you with two sectors, railway and defense. The last few months have been phenomenal for some of these stocks. And even the stock performance, the earnings have been rather impressive. Do you think there's anything that could come out in this budget that could fuel the next leg of rally for these stocks?
I think the budget would have to actually confirm that all the expectations in the share prices and the earnings expectations are going to be driven by the capex. So, if you take the budget as a whole, obviously, energy, renewables in that respect, defence and railways will be something that the government will always spend money on. It depends if they divert any of that and say something like affordable housing. Maybe they're going to look at that again to kickstart that, in terms of getting the bottom end of the housing market moving, not just the top end, which we've been seeing. So it's a fine margin. I just think the market's baked in, strong capex by the government across all of these sectors, and obviously, order flows will come through, and the share prices or the stocks are moving ahead of this expectation. So. Again, you can only disappoint on the downside here. I'm not sure there's any extra you're going to get from the budget to propel these stocks higher in the very short term.
Okay, so pre-open rates have settled. Thanks for that, Andrew. Pre-open rates have settled, and seems that Paytm will do what it does. Mankind Pharma, Ajanta Pharma will do what they do. GMR Airports on the poor numbers will also start off weak. What will do well? Maybe cement. Just before I get to cement, this is live footage. And Well, what is in this bag is something that will be the cynosure of everybody's eyes.
You know, I just
in 1 hour, 50 minutes from now.
I just want to talk about the Bahi Khata because this is important.
We have 30 seconds to do that.
30 seconds. Traditionally, the finance minister used to carry a briefcase. This one changed that to a red Bahi Khata, which is the traditional Indian ledger book. So that shot is important.
So much for modernization, huh?
No.
Shouldn't we move to an iPad?
It's about, but she reads from a tablet inside the parliament. This is to show that we are moving ahead, but we're sticking to a traditional route. So a lot of symbolism in that red folder. It's the Bahi Khata that you're saying.
Just for whatever it's worth, Bahi Khata is a startup which is valued quite significantly as well.
Trust me,
so keep that in mind.
always link it to stock on the radar.
Yeah, most certainly. Okay, let's focus on cement stocks as well. Mahika is here with the brokerage views on Ambuja as well as Shree Cement. Mahika, very quickly, what our brokerage is saying?
So I'll start with Ambuja, and it's a positive overlook. Morgan Stanley maintains an overweight, and they say that Q4 will see the Sanghi integration come into full effect, and they're betting on the long-term market gain, which will be supported by expansions. Citi also retains the buy, and they say that there is a favorable swap ratio for Ambuja, which was the merger with ACC. Novuma also has retained a buy rating at a price target of 609, and they've also mainly focused on Ambuja's new guidance to achieve an EBITDA per ton of 1,450 to 1,500 in the next 3 years. Then we have Shree Cements, where Morgan Stanley has maintained an equal weight, and they're betting on the strong volume growth outlook on the rising share of premium products. We have Jefferies that also has a hold rating, and they've spoken about the cement capacity additions that Shree Cements aims to make. And finally, we have Motilal Oswal, which has also maintained a neutral rating, and they have raised the EBITDA estimates by 3% for FY25 and FY26 each.
Right, cement is, Mahika, thanks for that. It's going to be the big talking point this morning for more reasons than one. Beyond the budget, stellar numbers being posted by the likes of Shree Cement. If you can just take a look at that, the stock performance in the recent few weeks or months will be interesting to see. But the commentary as well coming from the management has been solid. So 3.5% gain is what we are picking up on that. Along with Shree, you'll have your Mankind, your Ajanta Pharma. Those stocks will be in focus. 197 Commune, Dixon Technologies, IRB Infra. That could be another one that you want to watch out for. Westlife, Jubilant are some of the other names that will be drawing our attention in early trade as we run into the budget very soon. IRB Infra 4% move after a 25% gain the stock has seen over the last few weeks. Dixon also not looking too bad, 3% higher. But yeah, a minute to go. I think sideways trade is what we'd be expecting at least till 11 o'clock.
Absolutely. But, you know, I'm just going to digress because I'm quite excited seeing those pictures of Finance Minister Nirmala Sitharaman. This is going to be her 6th budget. She is now at a record number of budgets. She is the first full-time woman finance minister to have presented these many budgets, and definitely an exciting one because she's taken the nation through COVID, kept a tight check on fiscal deficit despite what was expected, and we'll wait and see if she can manage to do that. So a lot to watch out for, Neeraj, and perhaps what she says today is something that may not play out immediately in the markets, but will set the flavor for the next several weeks.
Yeah, and hopefully if it has an immediate impact, it's a positive one, Tamanna. So watching out for, hoping for that, if you will. But 27 seconds left for the markets to kickstart trade. Our guests are with us. We haven't been able to ask Andrew about all the things that he's watching out for, nor Chakri about the expectations from the key sectors. But we'll do that in moments from now. For now, as Samina and Tamanna have stated, focus on the stocks which will react on numbers or otherwise. The start, we'll watch out for also what some of the auto names and pharma names are doing and whether they're taking off from where they left off yesterday. Here come the first trades on the market open. Okay, we'll get them in a moment. Yep, it's a flat start, 21760. Let's get the Bank Nifty and see if HDFC Bank is participating. Maybe, not too much, but the Bank Nifty is up about 1/3%. The mid-caps and small caps, which had a very strong day yesterday, flattish start for the mid-cap space, and the small cap index about 0.5%. By the way, viewers, this is not too bad because Asia is very, very mixed after what the US markets have done yesterday. Bring up the heat map. We are flat too. Bring up the heat map and let's see what's moving and what's not. On the downside, not too much. Wipro is the top loser. So on the gainers, Tata Motors, Eicher, Maruti, Hero, M&M. It is an auto day. as was an auto day yesterday. Yes, BPCL is the top gainer, but the screen right now belongs to autos. There is, yes, the 5 of the top 6 performers are auto names. There is an Adani Port, Ultratech participating. So not too much of a cement flavor, but nevertheless, we're seeing some bit of moves there. So the large caps are very, very muted. Suffice to say, the action is at the broader end of the spectrum. So I'll quickly hand over to Tamanna for what's happening at the broader end.
Yep, absolutely. And, if you tuned in this morning, you would have seen autos on our list of stocks to watch. Good numbers are expected in this month. But I want to quickly take you through some of the other very, very important stocks that we're watching. And, we can't avoid Paytm on that list. Sort of a jolt from the Reserve Bank of India after market close yesterday. And you already saw that stock get beaten down in pre-open. It's continuing at a 20% dip. So it's a lower socket kind of a scenario. That rocky boat is expected to continue till you have some clarity from the management in a con call at 3:30 later today. What's happened? RBI has stopped Paytm Payments Bank from accepting any money. Dixon Tech is the other one that I would keep on the radar. So earnings impact has been positive. They also will have some kind of relief from lower import duties on mobile components. So Dixon is up about 5.5%. We talked about Godrej Consumer, where you've seen the FMCG space quite muted, the consumer space quite muted. Godrej Consumer, relatively good numbers. The stock about 9.5% up. Westlife, on the other hand, may not have the same kind of a story. And you're seeing the McDonald's seller, the burger seller, down about 3.5%. They've had some issues with same store growth. Their SSG numbers have been poor. Floods, in part, have been the reason for that. So some of the stocks on our radar this morning.
The stock of the morning, one of the stocks of the morning is Dixon Tech. The stock is up and about, sharp up move coming in on the counter on back of a pretty solid performance being put out by the company. We have with us Atul Lal, Vice Chairman and MD of Dixon Tech. Atul, thank you very much. This is Samina. Thanks for joining us. I know you have a meeting, so we'll keep this short. We'll keep this quick. First up, you want to walk us through the fantastic quarter you've had?
Well, it's been a good quarter for us, undoubtedly. We have grown in revenues by 100% and more than 90%, almost, and in profitability. So indeed, it has been a good quarter. The order book, particularly in mobile, telecom devices, the new contracts bagged in the IT products looks healthy. And even in other businesses, except for one business of lighting, the business looks good, yeah.
Mr. Lal, good morning. Neeraj here. The note suggests that two things have happened. One, integration that you are seeking. So one, that the guidance, you've refrained from giving a guidance. So is there a specific reason for that to happen? And two, just a word on margins as well, because one of the notes seemed to suggest that you're looking to vertically integrate with PCBA for industrial products which can aid margins.
So we are not giving any specific guidance,
okay.
But we are assuring all our stakeholders that the growth is going to be extremely aggressive. We are sitting on some kind of an inflection point, a sweet spot. We are into 9 businesses and in lead positions. So the growth, please be rest assured, is going to be very, very good. As far as so now is the time for Dixon. We strongly feel that not only grow horizontally in different domains, but also work on deepening the value addition. So what I had stated in the earnings call yesterday was that we are very seriously evaluating project on displays for mobiles and for IT products. The discussions are on with the potential partners. Let's see how it pans out. The other foray is into the EMS domain, wherein the margins are higher. And that is for PCBAs and also for box building for industrial electronics for global markets. So we have set up a team. We have received some significant RFQs. Let's see how it pans out. So these two would also be now the focus areas.
Okay. Mr. Lal, so revenue growth formal guidance notwithstanding, would you reckon that FY25 could be a year of growth which could be similar to FY24 in color, if you will, and could it be accompanied by better margin profile as well? Also, maybe a sense of any new logos that you're adding. I know you refrain from giving names usually, but is there something on the anvil?
So undoubtedly, the growth in the revenues is going to be in a similar range, what you just mentioned. As far as the margin profile is concerned, because largely the growth is coming from prescriptive EMS business, I don't see an uptick on the margin. It's going to be in a range of 4.2%. And as far as the new customer acquisition is concerned, yes, we are on the anvil of signing with a couple of large brands in mobile. And also the discussions are on with some more large global brands in IT products. In telecom devices, we have an extremely strong order book from our anchor customer Airtel and also the largest mobile operator. So the order book looks good, yeah.
Good morning, Mr. Lal. We're also speaking to you. So a couple of things that are exciting for Dixon this morning. Of course, your numbers, but it's also the budget. And it seems that whatever was on your wish list, maybe one of them got ticked off yesterday itself with import duties cut from 15 to 10% on some mobile parts. Can you explain to us the impact of that for you? Is that something you will pass on? How does that play out?
So undoubtedly, it was a very, very significant positive announcement by the Ministry of Finance yesterday. Yeah, it was a big positive surprise for us. And this has been the ask of the industry for quite some time, and the government has responded to it extremely positive. So there has been a reduction on various components, and also there is some clarification on custom notifications pertaining to display. So these are very, very positives. And even beyond mobile phones, there were certain clarifications sought on custom duty exemptions that were there, and there were certain doubts around it. So those exemptions have been extended. So undoubtedly, it's a boon for the industry.
So Lal, very lastly, I know you've got to run, but one last question. You talked about the cut in import duty, but anything else that is on that wish list that you're hoping could either come through in this budget or the full-fledged budget in July?
So the policy intervention and policy framework for electronics industry in the last 2-3 years has been amazing. The government has rolled out PLI schemes, the PMP programs, the SPEC scheme, duty intervention, non-tariff interventions, quality control orders, semiconductor policy. So the package has been rolled out, and now the industry has to respond. However, from the industry side, also what we are requesting is that to deepen the value addition, we need a policy intervention on the non-semiconductor component side. And when we're interfacing with the government, we see their response to be positive. So this will deepen the value addition for electronics manufacturing in India. And also, there is a possibility that when these footprints or non-semiconductor components are set up in India, in these components, India will become a part of GVC, the global value chains. So that is what we are expecting. And we are getting positive responses.
Okay, Mr. Lal, we leave it at that. Thanks so much for taking the time out and being with us, and all the best for the year ahead.
Thank you so much. Thanks very much.
That's Dixon Tech, strong numbers and doing well. Andrew, Chakri, Sudeep are still with us. Gentlemen, sorry, but just that kind of a morning, too news heavy, so couldn't do justice to the time, but we'll still try and make good. Andrew, I'll come to you first. On the commentary that you hear from companies like Dixon, I mean, margins notwithstanding, they've grown at a breakneck pace for the last few years and continue to do that. What happens to some of these EMS plays? There are now 8 or 9 listed. How constructive or not constructive are you on this space?
Very. I think, Niraj, I think we just need to say that we're at the beginning of the runway here for the whole electronic manufacturing sector. It's got a huge kind of 5 to 10 years of growth. Now, in between time, you're going to get usual things about margins and this and that. It's the same as the telecom sector. If you go back and look at Bharti, it has, kind of ups and downs along the way. But see where it is today. And I think that's what you got to look on the long term here for this electronic manufacturing sector. The government continues to push this either through more kind of incentives and PLIs. It's going to be a kind of investment horizon. If you've got 3 to 5 years, you're going to make a lot of money from this sector, and there's plenty of companies, as you just said, now to kind of to invest in. So that's the good news. So you just have to kind of dip in and keep there for the long term.
All right, Chakri, let me come to you on a very specific budget-related point. Also, auto sector is completely zooming this morning. But Chakri, back to budget, when we talk about the push of the government in terms of Make in India, and that's a theme, taking off from what we're seeing with Dixon. Dixon's growth is also part of the larger Make in India rubric. We're seeing that with defense stocks. How would that play out into specific investment decisions for you? What would be, say, your top 3 companies that would ride the Make in India wave?
The Make in India is actually impacting just about every sector in the manufacturing space. We just were talking about EMS as a space now, whether it's Dixon, Avalon, all these companies, they have both export revenue as well as the import components to make that export revenue. So that importing bit is the PLI schemes to replace it. And so that incentives is great. Second is, solar, renewable energy. A lot of the solar panels, manufacturing, EPC, the prices have crashed. Now Indian companies like Sterling Wilson can now compete with the global players, and the rollout makes it so much more feasible with the policies in place. Then third, if you look at including the other aspects of manufacturing, whether it's defense, in defense, the value chain is quite huge. Now, it's not, now if you look at a company like the Bharat Electronics, now this is a company whose margins have actually improved in the last couple of years, simply for the fact that they're moving down into higher margin, aided by the government's thrust. So we are seeing this benefit trickle down across various sectors.
Chakri, one quick question before we're completely out of time. I want to talk to you about auto at this stage. Tata Motors in particular has been zooming ahead, even ahead of the budget or the auto sales numbers. Overtook the market cap of Maruti only yesterday. And as a whole pack, actually, that sector has been doing well in terms of stock performance in the last few days. What's your view on auto, and is there any specific auto stock you're constructive on at this stage?
Auto and auto ancillary both will continue to benefit. Auto ancillary has a lot of the PLI incentives so companies like Motherson Wiring, they'll benefit right from the EV push as well as the PLI push. And second is, Tata Motors, you mentioned, it's a global story, it's a local story, commercial vehicles, passenger vehicles, strong lineup of EV cars, strong lineup of domestic budget cars, commercial. So it's there across the board. Its balance sheet has dramatically improved. So as and when the global economy also starts ticking up, now you'll have a dual engine. So Tata Motors still looks very good. TVS Motors in the two-wheeler space looks very good.
Chakri, we'll let you go on that note. Thanks much for taking the time out and being with us. Really appreciate. Andrew, just stay on because I just want to get an FMCG view here. But before I come to you on that, just want to mark Godrej Consumer, Dabur, amongst the two names which have had a really strong start in the session. On the back of that, a couple of others might be doing okay. I wonder if the FMCG index by itself is doing okay for itself. Sudeep, come in on the start that some of these FMCG names have had, and is there any that looks attractive from a trade perspective?
Neeraj, if we see this FMCG index today, it is up 0.5% to 1%, but largely both these names which you just mentioned have done fairly well. But apart from that, HUL, ITC is kind of sluggish. So that is the reason we are not seeing any major bump up in the index. But apart from Godrej CP, I feel one name which deserves a mention is Kolpal. Now, Kolpal, even while we were discussing about the rollovers, now rollovers also were very good in Kolpal, and the stock is in a completely upwards trajectory on a monthly as well as weekly chart. So there is strength building in Kolpal, and I feel very soon this also could break out on the way on the upside, and this looks good from positional perspective.
One very quickly, please, Sudeep. Take on Motherson Wiring, because Chakri spoke about it. That stock nearly 5% up. What do you like Motherson Wiring, and do you like anything specifically in the auto anch space?
Yeah, so if we come to Motherson Wiring, the stock has given a breakout now. It's a monthly breakout, taken out all the previous swing highs around 65, 66 levels, and I feel the structure is very good from the current levels also till it holds 63. This stock could move all the way up to 78, 85 levels on the upside. May take a few weeks, but the trend is very strong. And one stock in the auto ancillary space which we like is Banco Products. Now, this stock has seen a fair bit of up move in the last several months, but the trend is still stronger here. It might consolidate from a short-term perspective, but looking at the monthly charts as well as the weekly charts, I feel the larger move is still there to be taken. And on any dip to 685, 700 zone, this could be bought for an upside of 800, 850 with a stop loss placed around 650 levels.
Right, Sudeep, thank you. Great having you on the show. We'll connect with you later this week, or next week actually. With that, Andrew, I want to come to a sector that you've been tracking and you actually quite like, is the tourism space. We saw numbers from Thomas Cook as well. I know small company, but those numbers were actually phenomenal in terms of top line growth, improvement in margins, and outlook as well has been looking pretty good. With the budget around the corner, do you anticipate a push for tourism? Is that a space you're watching out for closely? And if yes, any sector, any stocks particularly that you like in this pack, even the tourism ancillary play?
Yeah, I think I'm not sure what the government would do in a budget for tourism. I think Prime Minister Modi's done quite a lot for the tourism industry recently in terms of, talking about travel in India, being in India. So I think that momentum will continue. And I think, every time I speak to people, they're complaining about the prices of airlines and the price of hotels, but guess what? They're still going. It's all going to be about experiences, and it's not just at the top end of the say the hotel chain. It's across different levels as well. So I don't see this as being anything that's going to reduce in the short term. But if anything, I think we'll see more and more business people traveling into India, and I think we'll see more foreign tourists coming into India as well over the coming year. So this will be the extra kind of fillip for the revenues for both for airlines and for hotels. So I think it's a great sector to be in, and I think it's one that you're going to see very, very strong growth because the operational gearing is going to be huge. Without having to add so many more rooms or so many more seats on airlines. You can fill those to their capacity and get some fantastic revenues.
Absolutely. Thank you for that, Andrew and Sudeep. Markets, meanwhile, as flat as they can be, sapat, as they say in Hindi, completely hedging their bets, waiting for some clarity to come in from the big event, which will be in just over an hour from now, when the finance minister speaks, an hour and a half actually for that speech. We're taking a very short break, but on the other side, Nilesh Shah of Kotak AMC joins us for his take on what we can expect in that red Bahi Khata that finance minister is carrying. Stay tuned for that.
Back to India market open on a news that the market is flat as a pancake, as Navjot Singh Sidhu would say. And I use that cricket connotation on purpose because our guest today loves to club cricket and markets and investing very well. Nilesh Shah, Group President and MD, Kotak Mahindra Asset Management Company, joins us right now on the show ahead of the budget. Mr. Shah, good having you. Thanks for taking the time out. And do you expect this budget to be a profound one, or would this be, in the words of the FM, the prelude to the main budget that comes, in the words of the PM, the prelude to the main budget that comes in July?
Undoubtedly, Neeraj bhai, this will be the trailer. The full movie will be visible in the next inning. But a T20 trailer equivalent will be as entertaining as the long-term test match.
Sure, most certainly. So what do you anticipate, Nilesh bhai? Would it be, would the FM be able to balance out a fiscal consolidation move by virtue of the fiscal glide path that we've given out while maintaining the thrust on capex? Are both of these in the same measure possible?
So, there is trinity of impossible, where on one side you create inclusive growth by spending money. On second side, you invest for future through investment, and yet you maintain the path of fiscal prudence. But over the last 6 budget, Honorable Finance Minister has achieved that. It's like Virendra Sehwag betting on the Multan Test cricket, where between beginning to lunch he scored a century, lunch to tea another century, and post-tea before the closure of the day, 3rd century with a 6 from 294 to 300. If a finance minister is betting like Virendra Sehwag on Multan pitch, then why should I have lower expectation? In my opinion, I have very humble expectations from the budget because finance minister is betting like Virendra Sehwag on Multan pitch. Please take measures so that consumption at the bottom of pyramid starts growing as fast as the top of the pyramid. Please support ease of doing business or investments in a manner that private sector capex starts growing as fast as the government capex. If these two catalysts are achieved with the path of fiscal prudence, I have no doubt in my mind that India will become citizens' pride and peers' envy.
Hi Nilesh, this is Samina as well joining in, and if taking a cue from what you said, if it is going to be supporting the lower end of the pyramid, the focus is going to be farmers, women and youth. If all of that is played to script in the next few hours, will that mean anything to the markets, or this is beyond markets? Because we do understand the budget is not just about equity markets, right? It's about the country, it's about the economy and a whole lot of other things. So will that have any significance for the equity market is what I want to know.
So equity market is priced for perfection. We are expecting finance minister to hit 4s and 6s. And this vote on account will give confidence to the market that India is on the right path. It will create inclusive growth. It will invest for future by infrastructure investments, by investments in education and healthcare. And yet, at the same time, it will maintain the path of fiscal prudence. We will differentiate ourselves vis-a-vis our peers because we trade at premium valuation to them. So this vote on account is a step in the right direction to reassure the markets that what you have seen in the past, where India achieves trinity of impossible, it will continue to move in that direction.
Nilesh, moving from equity markets to the bond markets, while that fiscal deficit number is going to be very important, and of course the range is anywhere from 5.2 to 5.5, people also believe that it's going to be the borrowing that will be even more important in terms of what the bond markets or banking stocks will do. Again, that number also ranges from 12 lakh to 15 lakh. How do you feel about the importance of this number and the fact that you are going to get, as a nation, $25 billion this year on inclusion in the GPM? So what does it mean in terms of borrowings? What will it do for banking stocks and, of course, as bond markets as a whole?
So we believe The quantum of fiscal deficit will be lower than last year as we move towards the path of fiscal prudence. From 5.9, fiscal deficit should come at about 5.3, 5.4 or 5.5. The net borrowing program will be almost similar to last year at about 11.5 lakh crore. But unlike last year, this year will have the benefit of debt foreign portfolio investment flowing through. If we do engage with Bloomberg bond indices, this number can even go further up. So there will be lesser pressure for borrowing program to go through. We will also be aided by potential rate cuts globally, which will create elbow room for RBI to cut rates as and when appropriate. So overall, my feeling is that the bond market will be softer and the year-end exit yield, let's say in March 25, will be at least 50 to 75 basis points lower than what we are seeing today.
Nilesh Bhai, good morning. Tamanna here. And I agree completely with Samina's point. Actually, budget is not for equity markets, but we are watching on, figuring out what's in it for us. Just your quick take on the point, which is very clear, that your capex build-up will be less than last year. It's on a higher base, but the government is likely going to spend at a lower pace. What does that mean for a factor that has been the biggest push for the markets on infra, rail, defense, green energy, based on government being the big spender? If government starts tightening the purse strings to reach a 4.6% fiscal deficit in 2026, is this something that worries you in the short term?
So our feeling is that most probably 4.6 for 2026 will be a bit ambitious to achieve, and hence it might get postponed a little bit. Second, today private capex is not growing as fast as the government capex, and hence government will have to be the front foot better rather than back foot better. The quantum of infrastructure investment this year is likely to be higher than last year. Last year we were targeting about 10 lakh crore. This year we may not target 12 lakh crore, a 20% increase, but certainly 11 to 11.5 lakh crore. This growth in infrastructure investment is necessary to maintain the momentum of our economy. And my feeling is that government has today opportunity on asset monetization and divestment, which will help raise its resources to fund infrastructure investment. So I don't expect degrowth in infrastructure investment. There will be an increase, and yet it will not deviate us from the path of fiscal prudence because there is opportunity on asset monetization and divestment.
Okay. Nilesh Bhai, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time. Take a very, very quick break. Back with more content on the budget. Back on NDTV Profit, let's cut across to the CI panel. My colleague Manvi Sinha Dhillon is in conversation with the CI President R. Dinesh and the Director General Chandrajit Banerjee.
We are talking about to further support this.
Okay, and I'm tempted to bring in Mukesh's assessment on whether on those specific actions that Mr. Dinesh has just outlined, we can expect movement?
The context to what is likely to come in the next 1 hour is 3 important statistics. We are touching a GDP growth rate of 7% against a world average of 3%. We are officially now the 3rd largest fintech economy in the world after US and UK. And we are now the 4th largest by market capitalization insofar as the equity markets are concerned after US, Japan, China. We've overtaken Hong Kong. So we find ourselves in a very interesting situation. And then we have a situation where still about 100 million people are below the poverty line, a fairly large middle class and growing economy. So what does one do with all of these, interesting statistics around us? It has to be growth-driven budget. Focus would be equal on agriculture, youth, women empowerment, employability. I think Dinesh cited out some important statistics. I think I would anticipate that the 15% corporate rate of tax for new manufacturing unit, which is officially supposed to be expiring for manufacturing, before March 31, 2024, to be continuing. I think there is scope for creating incentives is not the right word, but I would say, lend thrust by way of non-tax incentives, continuation of PLI, employability. There has been a thought for last several years whether you should bring back investment allowance, a capital allowance, which used to be there in the 80s and the 90s to give thrust to private sector capex. For reasons well known to the government, they have not brought in any changes, but I think this is a good inflection time for us, given the growth trajectory, to look at it.
Okay. You've, in a sense, touched upon business sentiment. You've also said very clearly that government spending on capex should continue. It's still needed to power the economy. Break down the business sentiment for us, and specifically from a capacity utilization perspective, because I know CII crunched those numbers with its members. When is there going to be a marked step up in private investment?
See, if you look at what has happened in the last 2 quarters, our surveys have shown that cutting across sectors, the lowest has been 75% capacity utilization, and in some sectors we have already seen 100% capacity utilization. But really, if you look at from a global scenario, and especially the geopolitical situations which arose, and as was pointed out, I think last year we talked about global growth as being less than 2%. So that is, I think, one of the main reasons why you have seen that the current capacity has been enough for, I would call it, the domestic growth. But having said that, if you are looking at another 7% growth over the last 3 years of 7% or more than 7% growth, and say as forecast, as you would have heard, is in excess of 7%, we do believe that we are already there. So it's a question of each of these sectors coming and private sector investments coming in to make that up from a manufacturing perspective. If you look at from investment in infrastructure, I think this crowding in or the support which has been given and that getting down into the states. So if you look at the center, the maximum expenditure has happened. So the rural areas, the focus on the infrastructure on the state side, and you see already some of these states have caught up significantly. So the rest of states catching up will be what I think will mean even more investment from the private sector, because at the state level is where the smaller companies will be investing in. So I think you will see that happening sooner rather than later, and you will already have seen it in certain sectors, but you will see it spreading across more sectors as you go along.
I don't know if it's realistic to expect too much in the interim budget, but I say this is as good an opportunity to send a strong message out to government on what business critically needs at this moment. For instance, Mukesh talked about the investment allowance. I'm going to ask you as honestly as possible to mind the conversations that you have with all your peers and say if there's that one thing which is still a bit of a prickly area for businesses. which could be tangibly addressed in the next few months, today or July?
Actually, I wouldn't say it's a prickly area, but it is a very difficult path to navigate. And just as we have navigated the difficulty in the geopolitical situation and the inflation and managing that from a fiscal deficit as well, I think the next issue will be the transition or the correct transition from both energy and sustainability initiatives. So there, how do we support the MSMEs? How do we support the small companies which are based not necessarily on sectors which are today seen as high growth areas? So those are the areas where I think both from industry perspective and from the economy perspective, I think both the government and the industry have to work together to make that happen. And that, I think, direction I 100% believe will be there in the interim budget itself. And as you said, that hopefully will be addressed even more squarely in the final budget. So there it could be a fund to support them, digitally transition to make sure that they utilize the benefit of the digital public infrastructure in a better way, and equally so when it comes to supporting the transition from the climate side of it.
Indeed, but they're still talking about old issues that plague them, like access, easy access to credit, more painless procedures when it comes to taxes. Again, sort of pedestrian things, but those are areas that we've seen moves on in recent years. I just want to, of course, our viewers are seeing the images on the screen, I'm sure, but, Finance Minister Nirmala Sitharaman arriving in Parliament, so now you have the countdown beginning in real earnest. I interrupted your thoughts when I raised that point.
I just wanted to add that we did, CII has already mentioned that while the budget is not the right place to talk about it, that there should be a three-tier structure on GST, to go back to your point of ease of doing business for the smaller companies, because they find it difficult to manage because of the multiple tiers.
Indeed. Well, I think we're going to take a quick break at this stage. Don't want to miss any action right here in the NDTV studio. And we have Nirmala Sitharaman, Finance Minister, getting out of her car at Parliament. She's got a busy day ahead of her. Those images currently on your screen, which you can see. It's a rainy day in New Delhi for those of you outside the city. I don't see any umbrellas, so perhaps around Parliament it's not raining. In fact, it's looking rather clear, and I know that all the Delhi Vasis have been pretty happy with the clean-up in the air. And Vishnu's been talking about, climate focus, climate change support. All of these issues are, of course, becoming more and more.
All right, so fresh shots there coming in. A rainy day in Delhi. May the finance minister rain down upon us a very, very good budget. On that slightly corny note, we'll take a quick break. Markets back in positive territory, but we're coming right back. We have a packed house here at the NDTV Profit Mumbai studios with all our budget masters in the house. You can't miss the next leg of our coverage. We'll be right back.
Welcome back. We are in a full-blown panel as we run up to the budget. Over the next 1 hour, we'll be talking to our guest about what the expectations are. Our budget masters joining us in the studios. We have with us Pranay Saithya, Manish Dangi, Shankar Iyer, Rajiv Anand, Darvi Dharmeshi and Mihir Vora. Thank you, gentlemen. Thanks a ton for joining us today on the show. Mihir, I'll start with you. Much ado about nothing. Is it a big budget? Is it an interim budget, a vote of account, like we're saying? Nilesh, in fact, a few minutes said this is the trailer and the full picture will be out in July. Do you feel the same?
I think so, because as it is, the budget has become quite a streamlined process, For example, the big component GST is pretty much outside the budget. It's decided by the council. Tax rates for corporates, individuals, especially the new scheme, new regime, is pretty streamlined. So not much left, frankly, to tweak around. But it's important to see the direction in which the finance minister wants to take the budget spending. Because, for example, we've seen a lot of stress on capex for the last 3 years. Whether that continues, and that's what the market's been excited about for the last so many years.
You think so?
Yeah, so that needs to continue, right? So we don't want any disappointment on that side. But the problem is that on the revenue side, they've been curtailing revenue expenditure almost just about 3% growth for the last few years. This is an election year, so there's a balance between trying to do something for the election and the population, masses, especially given that rural economy still probably is a question mark, in terms of growth. So balancing capex requirements versus revenue spending is something that we need to watch out for this time.
It's an interesting point. And sorry, just a follow-up there. Could rural be flipping? I mean, just trying to understand. Women participation, remittance is very strong, as Pranjul Bhandari was telling us the other day. Wage growth starting to pick up, El Nino fading. So if you looks at 12 months out, could rural be a slightly lesser headache than what otherwise could have been perceived?
It's likely, yes. Especially, El Nino is one impact. We did see some unseasonal rain in some states this time around. But given that we've almost seen 2 years of not so great rural growth, the base effect itself should take care of a lot of growth. And with raw material prices coming down globally, inflation under control, that is a possibility, yes.
Okay. To be fair, El Nino is just starting, in the sense we haven't seen it played out. So a bit more of, agri pain.
El Nino impact seen, could it be fading? And that could be something
I'm
playing on the minds.
The impact of El Nino itself as a phenomenon has not played out completely. So we might not be at the end of that phase. But yes, rural consumption could be boosted, I suppose, by a lot of other factors as well. Mrinal, let me come to you on your take this morning. And, does this also become a very important vote on account or speech to listen to because of precedents? We know that in 2019, the same finance minister in a vote on account before an election was very clear about what she wanted to do and what this government would do when they came back, not if. That's the confidence with which they go into a vote on account. By all accounts, that confidence could be merited this time round as well. In that sense, is it very important to watch out for that? What is the next step of policy direction? Yes, you have decided to make in India, you have boosted capex, infra spends are there. Now what next?
So, well, very relevant point. See, the vote on account is clearly going to be a statement of intent. In terms of where does the government see the revenue trajectories coming from, what do they expect, and where do they intend to spend. Now, the spending part is the most crucial part. The government for the last 5 years has been the largest spender in the economy. They have been the force behind which the entire capex story and the growth of the economy has been. So we would like to see that capex number moving up. We would like to see how do they intend to accrue that amount that they intend to spend. So that, yes, it is going to be an intent statement. Indirect taxation is anyway out. It's part of the GST Council framework now. So the direct taxation, whatever they want to do, if at all, generally vote on account is not somewhere they tweak too much on direct taxation. But at least where do they see the revenue trajectory? Where do they intend to spend it? The direct taxation revenue trajectory would be interesting to watch. We would be very keen to observe what do they want to talk about it. The fiscal deficit numbers, that's crucial. If we do get any sense on what would be the off-balance sheet items, that would be interesting too.
Just on fiscal deficit, we spoke with Nilesh of Kotak AMC just a short while ago, and in their view, the 4.6% target for FY26 is a bit ambitious and they may not be able to stick to it. Any call from your side?
I would concur. I think I would say 4.6 or somewhere around that would be very, very, very ambitious. In fact, the contours are more important. If they are going to spend that money into capex, that's fine. A bit of stretch on the fiscal deficit is all right, because we are yet to see a significant revival into private capex. Once that happens in a meaningful way, I think the government can decide to spend a little less. But at this juncture, the rural needs support. The economy needs supports in terms of government spending on capex. That needs to continue.
Taking a cue from that, and Shankar, I'll come to you. Rural needs support, and it's been explicitly stated that women, youth, and the poor, so the bottom end of the pyramid, is where the support will be coming in. It is still an election year. While the government seems confident about what's going to play out over the next couple of months, what do you think? Do you think this one may be a populist budget or unlikely?
First, I want to sort of disabuse this idea that this will be an interim budget. I don't think this government believes in asterisks. There are no conditions apply. And if you go by past performance, as all you market guys say, is a good guide for
I like the
future.
Refrain, all you market guys say.
and I think the only thing the market guys say is don't go by past performance, but nevertheless.
But in politics, past performance is an indicator of what they will do. The 2019 interim budget presented by Piyush Goyal was 22 pages long, had extra expenditure of more than 1 trillion rupees. It was an interim budget, so-called. But the Modi government doesn't believe in interim and all those things. They will go in for. So take the context now of the economy. The political need and the economic need are at a convergence spot. You need to keep spending on capex, because that's how you're creating jobs, because the private sector is not yet creating jobs. You need to spend on welfare, because private final consumption is barely 4%, whereas your GDP growth is around 7%. So even if you want to push that, you will need to do that. Where are you going to spend? She referred to this whole new acronym that has been created by Hardeep Puri now and Mr. Modi, is GYAN, that is Garib, Yuva, Annadata and Nari. Translated, the voting class. Okay. Now that voting class is crucial for 2024, depending on what is their target. Are they targeting ab ki baar 400 par or ab ki baar 350, whatever is their target, they will focus on that. Unless you understand politics, there's no point in sort of waffling around the economic parameters of what the fiscal deficit will be and all. Mr. Modi, I don't think believes in all his ratios and all. I think he's conservative in the sense that you should have a structure by which is viable, sustainable, just as his politics he thinks should be viable and sustainable. So I expect a lot of things in this budget. I expect PM Kisan, some topping up or at least an announcement, if not an allocation. I expect some amount of push in terms of what they will do for women voters, because the W is actually the X factor in India's elections. And then they might have something to fix the problems of the old pension scheme and the new pension scheme. Yeah. And that's been there in many of the states. Now, having said that, they will also announce a big capex push for railways, because there's much scope in railways for investment and creation of... because it's one area where you have services, you have manufacturing, and you have connectivity, the logistics play. So they will play into that. Roads, we are pretty much at 30 kilometers per day, and I don't know how much more roads you can build, but definitely railways has scope. So I see, if you just put back all the things, Jaswant Singh used to say there is no economics without politics. And so there is the economic circumstance and the political need. So they are converging. So whether she makes only announcements now and leaves the allocations for July, or whether she allocates now, is a call that Mr. Modi will take.
Okay, interesting. On capex, and Mrinal, I'll come to you first on this. There's a point made that in FY24, state capex has shown a 40% growth YOY, and that is looking very strong. Does that ease the pressure a little bit on the centre to dole out a big bang capex in a year, presumably, of fiscal consolidation? And I know Shankar's views differ here, so I'll come to him as well. But let's assume that, forget 4.6, whatever the number may be, but let's assume that the next 2 years, some inkling of fiscal consolidation. Can they do that simultaneously while not increasing capex numbers too much, because state capex is anyways looking strong?
Well, the last union budget talked about 8.5 lakh crores of central government capex. My estimates are roughly 12.5 lakh crores has been spent in the economy, state and center included. Let's see what number the budget estimate comes up with this time. But state is significant, it's growing, but it cannot compensate for the central capex.
Of course not.
So, I think there's no great merit in getting fixated about the fiscal deficit number. I would say that as long as capex is driving that expansion, it's all right. Subsidies would be a bit more troubling. Off-balance sheet items are something that we need to keep an eye for. I would not be worried about a fiscal deficit, inching higher and being driven by capex. That is not a worry for me. Okay, that's required.
I want to make this point to Mihir, because I know Shankar is of the view as well that, capex or a fiscal deficit number being higher, right, might be a possibility.
No, Neeraj, one thing one must understand. The fiscal deficit number is just a ratio of your gap between expenditure and earnings. Okay. Yeah. Now, the economy might grow, and this might actually fall.
Yeah, but it will effectively be the ratio that they will announce.
Yeah,
right?
so if the economy grows, higher growth, higher capex, higher growth could bring down the deficit number.
But the problem with that is it becomes inflationary in pressure. So economists may not be pleased if you have high growth and high deficit. So that is the double-edged sword there.
I don't know whether in India's inflation matrix, the government spending has some role, but actually it's the seasonal ones that trouble them politically. So the tomato story might be bigger than what Shaktikanta does.
Yeah, but be that as it may, the limited point, Shankar, is, and which is what I want to get Mihir here, is that independent of what your economy number is, they will give a fiscal deficit as a percentage of GDP ratio, and if that is higher and doesn't show the path towards the fiscal consolidation 4.6 number or a realistic number there, is there a reason for bond markets and then subsequently equity markets to be worried, Mihir? That's my question.
See, first of all,
or will they take it in their stride?
First of all, I think it's very unlikely that they will not reduce the deficit. They will show a reduced deficit.
Of course they will. The quantum.
No, I'm saying...
Sorry.
Because they have to show a path to 4.5, right? We are going to get included in the bond indices, global bond indices this year. And that's based on the premise that you are progressing on that fiscal consolidation front. Look, every country in the world blew up their fiscal deficits post-COVID. So I think that was necessary and it's done. But after that, we need a path to normalcy. And that normalcy for us is somewhere around 4.5. They have to show it, if not in 1 year, 2 years or 3 years, but they have to show it. So my guess is at least a 40 to 60 basis points reduction in fiscal deficit will be shown this year.
That's for FY25.
FY25,
but 4.5% in FY26 seems doable to you?
I would say maybe FY27 looks more likely.
If you do 70 basis points this year,
even if they show a path to 4.5.
No, that's my point, yes. So independent of whether it gets met or no, do you think the bond markets and the equity markets will be worried if they don't show a 5.5 number or below?
I would
for
think
FY25.
So, yes, because everybody is working with the assumption of 15 lakh crores gross borrowings.
Right.
That seems to be the consensus.
But
right? Which is flat versus FY24. If that 15 lakh is projected to be higher, then it is a cause for concern, yes.
There's another way to look at it this. Since the FRBM Act was passed, Government of India has never met its FRBM target. But every interim budget has a higher fiscal deficit number and the regular budget lowers it by 10, 20, 30 basis points. The question is whether they will give a pathway to 4.6 and that will be given, but maybe it will be pushed ahead. Okay, there is no country in the world which is holding on to its macro numbers. India has a reason to do it because we are already on the JP Morgan index, and then the Bloomberg index we are coming in, and there's one more apparently. So once you have that, you could see two ways. Anyway, the money is coming, so it won't affect the bond market that much, or to keep the trail route. So I tend to think that they will give a pathway because the government is very keen to upgrade its ratings. If you notice, in December, the chief economic advisor put out a whole compendium of essays in which a large portion discussed why India's ratings must be better. And so that is a goal for Mr. Modi. So I think that they will work towards that. So they will give a pathway. It may not be 2026, it may be 2027. They will also probably redefine some of the spending as green. Yeah. You see, that qualifies you for an exemption from the regular assessments among the rating agencies and others. So it's at the end of the day your definition.
I just want to come down to a very simple way of looking at it, and we'll take it through the panel, Mrinal. Today, at the end of 12:30 or so, and our budget masters will be there with us, what would be your best case scenario and your worst case scenario coming out of this budget? The assumption is that there is there's a very minimal chance of any harm coming out of it. No, hidden taxes which rock the boat, etc. But in your view, what would be your, best and worst possible outcome from today?
So, very interesting question. So, if you ask me democratically, most viewers would be liking to see LTCG going away. So that would be a dream thing for them.
That's not happening. Ain't gonna happen. I can tell you that.
Yeah. So I guess people would be happy. No tweaking around that. I guess most viewers will be happy. Most investors will be happy. It would be interesting to watch. There have been corners in the market which have been asking for government to review on the dividend taxation. They've been asking the government to review on the debt taxation. So does the government heed in that direction in some form? That would be interesting to watch.
Just a quick one. Indexation that got removed last year, I mean, has put the debt mutual fund industry, off. Do you think anything could be done on that? Would they revisit that, do you think? I mean, go back on it, or very unlikely at this stage?
I don't think they'll reverse it. In my expectation, they won't toggle back so soon. Dividend taxation seems to me something that could be more interesting to watch. There have been a lot of people who've been kind of pushing for that. Yeah.
Okay. Gentlemen, stay on. We need to cut across to Delhi, where my colleague Manvi Dhillon is in conversation with Sanjeev Puri, CI President Designate and Chairman and MD ITC, as well as Mukesh Bhutani, founder of BMR Legal, plus Rajiv Memani of ENY.
Make any changes, and specifically the benefits for new manufacturing companies, which is 15%, which lapses this year. If they can extend by 2 years, given the fact that manufacturing is now picking up in India, I think that will be great. And the second is, as always, I think people do anticipate that on the personal tax side, especially to spur consumption, deal with the inflation, if they can raise the rebate level, especially in the new tax regime on personal tax, from say 25,000 to 35,000 or 30,000, whatever that is. I think I would anticipate that. More than that, whether they will do capital gain tax rationalization, tax TDS rationalization, and the most important thing is how do they deal with dispute resolution, which I think is probably the single most important thing in my view. Whether they'll do it in this budget or not, I'm not sure.
But they have the room to do it. There'll be nothing amiss.
There'll be nothing amiss. No, most of these things don't have a significant budgetary impact. And I think some of these representations have been made earlier also. So I know that the finance ministry is well prepared. I think my sense is just from a timing standpoint, when they want to do it is the issue.
Particularly, capital gains rationalization, TDS rationalization. I mean, sometimes you look at that and you wonder what is the logic behind the systems that we have in place currently. You talked about dispute resolution, and you flagged it as an important area for lay viewers. Can you just explain exactly what you mean and whether there's some expectation of progress in the interim budget?
I think we have made reasonable progress in the last 12 to 18 months in various areas. But I think one area where there's a lot of clogging up that's happening is in the area of CIT appeals. I think there's a lot of clogging up that's happening there. If they can find an easier way of, so that some of these things don't get into, litigation for 5 years, 10 years, 15 years, to alternative dispute resolution mechanisms, some of which are there, but they've either not been fully implemented or they're at slabs of income where probably the dispute levels are lower. That's what I would say. I think also beefing up the APA and also the bar, which is the advanced ruling piece. I think those things will be, my view is that those things will be very important. Again, I think the Finance Ministry is aware of this. They are well equipped to handle this. They'll have to choose the time when they have to do it.
They'll have to choose the time.
If I look at from an investor perspective, I would say consistency of tax rate, which has been the hallmark. Just figuring out that there are ways to resolve disputes so that they don't go on for 10, 15 years would be the most important. GST is another area, but I don't think they'll address that in this budget.
Okay, Mukesh, if I can get you to weigh in terms of your experience on the improvement in the dispute resolution environment, it would be good.
I largely echo what Rajiv mentioned earlier. We may not find many of these in the finance bill, even if she moves legislative amendments, which is unlikely in an interim budget. But I think the government has a knack of, making progress on this on a continuing basis. Case in point is the tribunalization of GST. So though we've had, 4 or 5 years of GST law, we've had GST assessments, but the disputes were landing up in the courts by way of writ petitions, and the courts never wanted to get into the merits of the case except give temporary relief to taxpayers by staying the proceedings or staying the recovery of demand. So tribunalization of GST was an important step which was taken 6 months back because it was clocked in disputes on the vexed issue of appointment of members,
right,
and which was cleared eventually by the courts, and that led to the appointment of members. The point that Rajiv made earlier, which is the first appellate authority, CIT appeals he referred to, that's an area where most of the appeals get stuck. However, having said that, I see a fair bit of development occurring on streamlining the dispute resolution. So if you just look at the digitalization of court records, the faceless appellate schemes, all of these measures are not necessarily featuring in the finance bill.
But they're happening parallelly.
But they're happening.
I'm just going to take in Rajiv's view here on, and this is a very simple question to you. Interim budget, modest expectations, we've all made that point repeatedly. But if there's one thing missing from the speech which will really be a disappointment for you, your peer group, flag that off.
No, I would say one would really look at macroeconomic guidance for next year. I think that's the
most important?
That is the most important, and specifically what is the capex spend, because that's really something that pushed the economy. So
you're looking for a 20% increase in government capex spend?
Yeah, I mean, I think it really depends on what's the budget expectation they have on GDP growth. Are they looking at 7%? If they're looking at revenue collection growth of 12%, then you have flexibility of increasing capex spend by 20%. But if this government also, they've done a very good job of making conservative projections. They've almost overachieved on the revenue side at least. So if they're able to do that, I think that probably, in my view, would be the single most number to look at.
One number that we haven't talked about, and I'm wondering how important it is in your assessment, is the fiscal glide path, the fiscal deficit number that they put in the document. A, is it important? B, what are you expecting it to be?
It's definitely very important. I'm expecting it to be in the 5.3%, 5.4% kind of range, specifically given the fact that they've given a 4.5% number for 26. And from 6.4% to 5.9%. So I'm expecting that to be in that kind of range.
And any sort of number that's higher than that, you'd be wary?
Yeah, I'm pretty sure that it will be in the 5.3 to 5.5% range. I think this government that way has been on the fiscal consolidation part has been very disciplined.
Well, we're going to have to leave it at that. Look forward to touching base with you later in the day, post an opportunity to hear what the Finance Minister actually presents. A quick break right here on NDTV.
All right, that was the corporate view coming in from Delhi, and we'll be getting you those updates through the day. Remember, you're going to get a very comprehensive 360-degree analysis right here on NDTV Profit. Meanwhile, time for a very short break, but we're back with our Budget Masters right after this. Don't go away. Well, exciting morning and packed house here at the NDTV Profit Studios in Mumbai as we are prepping you for what is coming. Less than 30 minutes left as scheduled for just about 35 minutes left for the Finance Minister to present her 6th budget. It's going to be an important one as we've been speaking. It comes before an election, but one that this government at least is very confident of winning and will show policy direction. Meanwhile, what's happening to the markets? Moving into positive territory, I would say with caution and some trepidation. What is really racing ahead, though, is auto. There's no stopping Maruti, and I'll just quickly pull up some of your auto numbers this morning. So a couple of things happening. Good numbers for Maruti relatively. Your auto passenger vehicle sales, etc., are all out today, and that's expected to be good as well. Maybe a bit of benefit from an infra push if that's announced in the budget. So 4% zooming on Maruti. Meanwhile, let's get back to the conversation right here in the studios, and I'll come to you, Mihir. A thing that I have noticed with at least the Modi government budgets, and correct me if you're wrong, for a long time, any kind of announcements that were seen as quote-unquote populist were seen as negative for market. But that is something that has become very easily absorbed when it comes to budgets that this government presents. Do you see that trend continuing? That, okay, if there is an increase in Pradhan Mantri Kisan Nidhi Samman payout from 6,000 to 9,000, no big deal, theek hai, chalega. We need it. You want to build up bottom of the pyramid. What the market is looking for is whether you're actually spending on capex. And do you think that trend continues so they can get away with a little more subsidy push or populist moves?
Certainly. But having said that, we also must realize that 2014 onwards till 2019, we actually saw a decent reduction in the overall deficits and subsidies. The subsidies as a percentage to GDP till 2019 actually came down quite well. It's only because of COVID that they had to increase the subsidies, especially on food and fertilizer subsidies. So I don't think there is a general bent of mind to be populist. wherever they are seeing pockets of stress or need to do it, they are doing it. It's not even across the board.
So no revdi.
No revdis. And I mean, look, during COVID, you had to do it, right? There was no other choice. But the general tendency has not been to, blow up the fiscal deficit. So I would not be too worried about that. There is a strong focus on capex. You name any minister, they are talking about, any kind of incentives required either by the private sector or even pushing the PSUs to spend their cash on capex. So that trend of capex should continue. As I said, they've been hiking capex budgets by almost 30% CAGR for the last 3 years.
But it's going to slow down this year.
It would slow down, but I'm saying, given a choice, they would still go for good deficit rather than a bad deficit.
You're not worried about maybe a slowdown in spending on capex and what it does to those sectors and stocks that have run up massively? Your railways, your defense, your infra, etc. Are you worried?
Look, railways, I'm not too worried, at least for the next few years, because they have laid out a path to modernization and they will continue to fund it. I don't think there's any backtracking on the existing announced capex, which is robust enough. On defense, actually, physically, they have not increased the capex budgets by dramatic amounts. It's the Atmanirbharta and manufacturing in India, which has been the exciting point, right? And now we are even talking about exports of defense. So I'm not too worried about railways. Roads, again, there is a certain momentum that will continue. NHAI can fund itself. They have been kind of, and plus there is also the InvIT route, which is becoming popular. So they can monetize some of the assets also. So there are enough levers to sustain capex. It may not be 30% growth, but even if it's a 20% growth, I'd be happy.
Taking a cue from capex, what do you think is happening on private capex? There's clearly been no pickup on that front. Anything that could be foreseen or expected to boost private capex, because that wheel also needs to run?
Look, private capex, again, on the headline, if you look at the survey data, etc., it seems to be taking some time. But if you look at the order books of capital goods companies, engineering companies, they're pretty much full.
Yeah, right? It's the execution that could potentially be a concern.
I think this time around, the difference is that unlike the 2003 to 2010-11 boom, it's not, the capex that's happening is not in mega projects. It's not like massive refining capacities or massive steel plants or, massive oil and gas fired power plant. This time around, it's more granular. I think there's a lot of mid-sized companies which are doing capex in the manufacturing front. The PLI scheme, I think, is a huge stimulus, and the impact of which probably we are going to begin to see now.
Yeah.
And the good thing is that PLI is really speaking open-ended. Any sector which needs incentives is getting it, frankly.
Taking a cue on that PLI, usually out of budget, do you think there'll be any indication on this? Sectors may be potentially added, extensions may happen at this budget today?
They could, but as I was saying, it's open-ended. Any sector. We started with mobile phone manufacturing.
And it's not time limited to today in that sense.
Exactly. I mean, any sector, frankly, any amount also. If industry is going and representing the government, they seem to be having an open mind.
Yeah.
Okay. The other aspect is energy. And we know that there are paths laid out. Company after company cited that in their presentations that, hey, this is the opportunity size, etc. There was some mention or a significant mention last budget as well to both Shankar and Mrinal. Shankar, starting with you. What's the focus on energy? Renewables plus the outlay and the impact thereof.
So if you look at the data, we import 86% of our crude requirement.
Exactly.
This is unsustainable, really speaking.
Exactly.
We have managed now because thanks to Iran and Russia and stuff like that. The other part is that 49% of our power generation depends on coal, which again is an issue as we transition to for climate change zero. Or India's position is that capping net carbon emissions, not necessarily net zero. So what do you do? So the Prime Minister announced on Jan 22 or 20, the day after the Ram Temple thing, the PM Suryodaya program, the solar for 1 crore or 10 million houses, that's unfunded just now. So that funding might come through, but it might be expanded to other urban. So the 10 million is primarily aimed at bottom of the pyramid story. It is the renewable version of Ujjwala.
Yeah.
So once that kicks in, they might create, which is why I said that if they redefine the deficit in terms of what is the green deficit and non-green deficit, there will be an energy transition story in this. And while we talk about private capex, I just wanted to add, we must remember that the corporate tax cut that we saw in 2018-2019 is sort of expiring. And I don't think this is going to be renewed. So the substitution will be through PLI, because it's a much more viable, much more directed idea. But all of this depends on whether they're able to grow the economy, because as it is, the Reserve Bank of India has sort of screamed about the credit deposit ratios.
Yeah.
And why deposits are not growing is also a part of the mystery as to why private final consumption is not growing.
Yes.
So there is this thing. So I think capex is on, I don't think, and there might be something new. How do you add to the government capex? How do you add to the government infra spend? It's to create the projects, green hydrogen, solar, multi-projects, basically.
No, yeah, but that's the point, that one, that there is a clear data given about the targets on the green side, wind, solar, etc. And two, as much as we've spoken about government capex and private capex, household capex also needs to be given some bit of a leg up. So therefore, one, do they do anything on the renewable side meaningfully, and how meaningful could it be? And could there be housing swaps, for example, loosely put, which could bring about maybe one factor of household capex into the fray?
So well, look at the technology landscape. I don't think we have a serious base power renewable option around. The government can create subsidy, can create framework, and it can incentivize some bit of peak power replacement through renewable, but we don't have a technological solution which is going to take over, let's say, 49% of our coal power generation. It's not there if you take away nuclear. So well, we will see the transition is going to be there towards renewable, towards greener mean of things. The government will do its bit, but I think unless science comes up with a serious technological solution, it will have its own issues.
But not the remit of the budget. So on the budget, what can happen which can even help some of those sectors or some of those themes? Because there has been a run out there anticipating continued government support, right?
There is one point to add to what he said. In terms of technology, the government is actively looking for storage solutions. Both keeping in view the green hydrogen idea and the solar. And you know, Mr. Musk has visited Pune, and there is an office he has set up there. They are talking to indigenous startups who are looking at storage. So you might see something, and I hope to see something, an incentive for storage, energy storage.
Sure. But yeah, so okay, maybe that too, and we'll look out for that. But just rounding off my questions, therefore, and I'm approaching this purely from a markets angle, that so many sectors and themes have had this spurt in the anticipation that continued support comes in. So what stands out in this budget or the next, but whatever, what stands out on the renewable side or on the housing swap side?
Well, housing is a clear darling. It is the sector which creates the biggest employment. It's the most formal sector which has the largest number of formal employees. And it has traditionally had tax swaps. It won't be a surprise if you want to actually move up the formal employment number, you want to bump up the household expenditure, there should be increase in the tax swap in some form and shape for housing.
You think affordable housing is the route to do it? Because that scheme hasn't really taken off, and now there is a demand that please increase the ambit of where you call it or how you define it as affordable housing.
Well, it could be a combination of both things. Number of taxpayers are just 6%, so if you want to really reach the masses, I guess affordable housing definition might be a good way to. And private capex, in the private capex side, the government has done its bit in terms of what it has rolled out on PLI. It needs to continue to spend on the capex side in the economy so that the buffer, the slack in the system goes away. We have the job generation, we have the economy picking up, and when the revenue or taxation revenue does reflect at some point, they can slow down on the government expenditure, and it will actually compress the fiscal deficit that we've been bothering so much about. In absence of good spending by the government today, we are not on the right trajectory to achieve fiscal consolidation 3 years down the lane or 2 years down the lane. It is required as of now that the government invests, because that will result into more jobs, more economic activity, which will increase the revenue for the government, which will finally help controlling the fisc. In absence of that, we will keep dragging things and it will go nowhere.
Well, it's a tightrope, you have to admit, a trinity of some impossible choices to make. What we'll do is take a break. Just before we take that break, though, about an hour and 20 minutes for the markets. Paytm still sulking, down about 20. But on the flip side, aside of autos, there is also some other stocks which are doing well. Shree Cement is a case in point. So that has done well. Not that all the other cement stocks are doing well, but Shree was up about 5% the last time I checked, 4.5% for it. And FMCG, it's the morning for FMCG, Godrej Consumer in particular, but some of the others like Dabur up 6%, not doing too badly either. Take a very quick break, come back with more.
It is a matter of truth that the 1st February 24 budget that will be announced will just be a vote on account. By 2047, India should reach a $30 trillion economy size. For the growing population, growing youth, young who need more skills, who need to upgrade their skills, you need the newer areas also to get priority.
All right, less than 20 minutes to go for the big budget speech that we're waiting to hear. Finance Minister Nirmala Sitharaman's 6th speech, an interim budget speech, but nonetheless an important one. We have a packed house here at the NDTV Profit Studios. All our budget masters are in, and I'm going to introduce them one by one. Manish Dangi joining us this morning. Mihir Vora is here. We have Shankar Iyer and, of course, Mrinal Singh there in the studio. So welcome once again to all of you. Manish, we've been having an interesting conversation about whether the expectations or the possibility of populist sounding measures are now priced in. It's not going to ruffle too many feathers because there is an understanding that this is a pre-election budget. You have to at least make some announcements. Now, how much money you spend or not is a different story. You would agree?
So there are a couple of things. One is, of course, the I mean, if you call it Modinomics, he does tweaks, but no extraordinary stuff is ever done. Neither in Gujarat for his 12 years term and nor the last two election speeches, So there was nothing extraordinary. Two is that as it is, budget and its finances are such that there's very little wiggle room now to sort of expand incrementally. So it's going to be only reallocation. Third is that within the budget of, let's say, government in India spends about 15% of GDP, just about 3.3% is spent on welfare. So only that you could tweak a bit, Some of it could, so very likely there's going to be a sort of subsidy going down by about 15-20 basis points as a percentage of GDP. And that much could actually go in terms of giving it away to through Kisan, some insurance scheme, likely some scheme for the organized labor because they have a data now. A lot of this labor, sort of urban labor.
Gig workers.
So not gig work, but generally all sorts of labor. So, it's sort of we are headed towards, in general, in the next term, kind of a basic income for 50-60 crore Indians.
Yeah.
So slowly, a lot of indirect subsidies, fertilizer, food will be subsumed in stuff like Kisan. So you'll have a labor-oriented sort of scheme most likely today. Kisan will have about 25-30% uptake. So from 6,000 per year to sort of likely to 8,000-9,000 bucks and so on and so forth.
So there's talk of an urban version of Manrega. Or some version of a...
So Narega is a insurance scheme effectively. It's not an employment guarantee scheme. Likely is that you're going to have a transfer. Because in urban, you cannot actually have urban landscape. You cannot offer Narega.
No, in the sense of when I say a version, I mean a payout kind of scheme where you have some guaranteed income for a certain number of days. We could see the contours of that.
Sorry, yeah. So basically, urban version of Kisan.
Okay, yeah, that's better put.
Manish, what are you expecting on tax buoyancy? What do you think is being priced in or penciled in by the government? Of course, the first 8 months it was up by 30%. Compliance, admin. Some believe is a one-time step up. Others believe because it's compliance and admin, that number will continue running. How do you feel about your income tax and also out of that ambit, so indirect tax, so your RBI dividends, PSB profits? What is the sense? What is the pricing in that you're working with and that number which you're comfortable with, and I believe the markets also would be?
So from a taxes point of view, it's been an extraordinary year.
Exactly.
Yeah. And so to the extent everyone is surprised, including FM, us, all analysts. Everyone is surprised, especially in direct taxes. The buoyancy has been extraordinary.
Yeah.
Some of it is sort of a mean reversion happening because, post-COVID, 2-3 years were very bad. 2 years were very bad. And then it's sort of going back to 2017-19 levels. But the buoyancy has been very, very strong. Very, very likely that it will fade in next 12 months. Again, the way budget math works and this particular FM works is that she would not assume more than 1.2 times buoyancy, which is a historic buoyancy. So it's sort of, you would get a 10.5% nominal GDP growth in budget estimate, and you will get about 11.5% odd tax growth. So that is what you will get. The small sort of a nuance in buoyancy is that while direct tax buoyancy is very high, the indirect tax, which is GST, is not that high. And so it sort of reveals a little bit about the economy of the K-shape that we've talked about, that a small 5-7%, 10% of the population which actually consumes sort of your air travel, a lot of tourism, that guy is actually doing very well. And his income and the corporate taxes and all sort of booming, twice of GDP growth. But the GST, which is sort of a proxy of a general consumption growth, that is what you see in the staple growth, discretionary, that is not doing that well. So there the buoyancy is only 1.2 times. In aggregate, the buoyancy this year would be assumed at, between GST and direct taxes all put together, more like 1.2.
And what about non-tax growth? You alluded to RBI dividend, PSB growth, but what do you think is a fair expectation? Again, this year was an anomaly of sorts.
Yeah, so I think even next year, the dividend from RBI, even the PSU bank dividend will begin to actually kick in a substantial manner now. So to some extent, I think the dividend as a percentage of GDP will sort of, in my view, my assessment will rise by 5-10 basis points as a percentage of GDP. These are big numbers. 10 basis point is 30,000 crore, let's say, 33,000 crore. What has been a big disappointment so far is divestment for the last 2-3 years. I think we've run out of assets now.
I think this government is one that does a buyback instead of divestments.
Or sort of, rotate the assets.
Or a list, right?
What do you mean we've run out of assets? Aren't we sort of late on
run
putting
out of assets that the capital market households, the sort of a blue-blooded capital is interested in. Which actually, so we've run out of those assets, and which
all
is
the
why,
good ones are gone.
As a percentage of GDP, the non-tax revenues have sort of stagnated at 1% or thereabouts. It used to be at some point in time 2%.
Sorry, before I come to you on bonds, Mrinal, this PSU rally though, and Manish's point is well taken. We've kind of missed the bus almost every single year for the last 2 on this divestment thing. But could the PSU rally help the government put out a number which they can say is believable on the divestment side for FY25?
Well, if I were them, I would use it.
Nicely put.
Okay.
But I think, Shankar, you had a good point on divestment. You want to come to that?
I think the upside available for them, the headroom available is phenomenal. I mean, the SEBI requires you to have 25% liquidity, blah, blah, all that. None of the PSUs, most of the PSUs don't have it. There's an announcement, I think, 5-6 years back where they said they will reduce bank holdings to 51%. That's bank stocks are not too well, so you will actually give them the buyer the upside. The other thing is that if LIC at 95% or 90%, does it really make a difference to the corporation? I don't think so. So if they put out 5% more as an offer or as a Bharat ETF, they could collect. So somewhere the government has struggled to do the asset monetization, and somewhere it has struggled to do the divestment process. And I think because of the plethora of clearances and rules and all, and also there is a belief in the government that, divestment gives them a bad name in the political arena.
I was just going to come to you on that. Is it a question of intent or ability? Because on all of the other things, politically and otherwise, this government has shown the capacity to do what they want to.
So there is a striking contrast if you see. The corporate world yesterday, Dabur, Bajaj, everybody actually spoke like they were releasing political manifestos, rural spend should go up, Narega should go up and all this. Okay, you never heard this before. People would squirm if you spoke about subsidies 10 years back. Now they're all, CII actually is almost sounding like the new manifesto. But if you see the government's approach, it's still very cagey about issues like asset monetization. Also, the depth in the market. Suppose they monetize the asset and a corporate wants to buy. The deposit growth, credit growth issue that is haunting the Reserve Bank of India will come into play. So probably next year, once the Firangs come in with the JP Morgan money or the other money, there might be some room, some headroom created. I don't know. There needs to be an innovative way to think about this. And one of the ways that I have been suggesting for a long time is to create a sovereign trust, put everything inside it, securitize it, and then make it issue a ETF on it.
But you should have some thoughts here.
In the run-up to 2014, me and many of our colleagues read biographies of Modi, and one thing that we concluded then, and maybe things have changed, because Modi to a certain extent has changed since then, is that he never believed in all this, selling PSU assets. And so even in Gujarat as a chief minister, his belief was that, okay, let's build our assets better, let's get better ROEs. So things like GSFC, many other there was a sort of a pride in, actually running the government corporations better.
Most certainly.
So I don't know whether it is ideological or otherwise, but the fact is that, divestment isn't happening.
It is very strategic. It is politically strategic because he believes, and people around him believe, that privatization creates challenges for the government in terms of the aggregation of wealth in certain quarters. The concentration of wealth is something that has bothered him, and he doesn't believe that private sector does better than the government if the government is efficient. It is a core belief. You can't do anything about it.
Yeah, it's possible.
But there is always scope for divestment, not
privatization.
privatization.
So that's why
You don't need to privatize.
So that's why I said that the sovereign trust like Temasek or the KfW in Germany can serve the purpose.
Just a quick mention, guys, on the market. It's flat, but Bajaj Auto has reported its auto sales numbers. We've been talking about how auto has been in such a sweet spot this morning and has been on a run. Numbers have come in pretty impressive. The stock is looking okay, 1% higher. The Jan total sales are up 24% YOY, and the CV sales have risen 6%. We will break that down if we get some more time before we run into the budget in about 9 minutes. But yeah, Neeraj, you wanted to come in?
No, so I just thought because Manish is here, and I would want to actually, just before I come to you, Manish, on the divestment side, you have this strong belief as well. Mrinal was saying that he would use it. You would believe the numbers could be high on the divestment proceeds side for FY25?
They should, because look at the valuations of PSUs that have gone up in the last 1.5 years. If there was a time to do it, this is the time, right?
Let's see if they
and there are lots of companies where the government owns 75+%. So there's ample headroom for at least 30 to 50,000 crores of divestment. Without really doing any strategic sale, frankly.
Okay. And before we take that break, Manish, what would please the bond markets? What would not please the bond markets?
And so after very long, actually, and it's almost like bond guys have had this, memories have faded that, there could be a structurally things can get better. The bond math never worked out in India since 2007, since Chidambaram did what he did. And in 2009, there was a massive borrowing. Finally, because of demographics, because of the cleaner way we present things, because generally inflation in India has well behaved, the fiscal policies, even though the fiscal deficit is higher, but because the structure of the spending is such that it does not inflate, I think we are headed, not just this year, but generally over the next 5-10 years, lower and lower yields. Okay, and so this particular budget, 5.3, 5.4% fiscal deficit, reasonable 15 lakh crore of gross borrowing, about 11.5, 12 lakh crore of net borrowing. These are the numbers, already out actually. Delhi has sounded us off in some sense, and everyone is going to celebrate these numbers. These are decent numbers.
Okay. If we get 12 or slightly higher than 12, but you've got that $25 billion coming in, that would still be okay, I'd imagine, for the markets,
Yeah, but
right?
very unlikely it'll be higher. This is going to be a bond budget.
Yeah, most of it. Not higher, if anything, will be lower.
Bond markets.
Yeah, but hey, guys, we need to slip into a very quick break. So we'll continue this conversation on the other side, but need to slip into a very quick break. Back with our budget masters and minutes away from the budget speech. Okay, back 5 minutes away from the budget speech, 300 points up for the Sensex, so about 0.4%. Bond markets and the currencies also, will just quickly mark them as well. But keep in mind, steady as she goes, if you will, if the equity markets are a barometer of what the budget could bring. Though never are, but I'm just using that term nevertheless. Now, we've spoken about the big picture. To each of you, the nuance or one small thing that you would probably anticipate. Shankar gave 1 or 2 ideas. Mir, something minutiae, micro that you probably want or expect the FM to announce.
I'm not really expecting, frankly, anything big bang. Frankly, I would love personal taxes to go down at least, because I know, as we were just discussing, this year is probably the first year where income tax collections are more than GST, more than corporate tax collections. So we're doing pretty well on that. We need some break on that.
The government get greedy. Yeah, we're just spoiling that.
But new tax regime has not really kicked off as they wanted. So they might add some sweetener there, you think?
I think so, because from what I understand, only about a third of taxpayers have opted for the new regime, and I think they'll make the new tax regime even more friendly and even simpler, and keep removing stuff from the old regime to make it more difficult to stay there. So that's likely. Okay. I don't know whether it happened in this budget or the July budget.
Okay, Manish.
Yeah.
More risk taking for infra financing, VC, private credit on the annual scope of this budget, or no?
Meaning, could something happen in any?
Could something be announced which could enable people like you to take more risks?
Yeah, so unlikely. I mean, it's a wish list. I actually wrote a couple of days back about it, but it's something that will happen perhaps next year or year after that.
One quick question, Manish. Currency. Are you expecting anything to be penciled in on currency? The reason I ask is because with India's inclusion on JPM, the currency markets may turn volatile. Anything there? Because
positive vol. I mean, it's positive a good vol. See, again, currency, we've had this conversation. Generally speaking, for good 20 years, it's a steady state 3.5% annual depreciation, sometimes very high, sometimes low. But big picture is we depreciate more than our inflation differential. Okay? We are just entering in an era now where the inflation differential vis-a-vis US is just 1.5–2% over likely over next 10–15 years, and productivity differential is enough for us to not justify. Depreciate. And the dollar is extremely expensive right now vis-a-vis all currencies in the world, including India. So we are actually entering in a setup where even 10 years out, our currency could be in 80s. So maybe 85, maybe 88,
that's comfortable.
Which is huge. I mean, otherwise, the run rate of currency depreciation is 3%. That means in 25 years, when our Amritkal ends, we should be 165 baht for a dollar. It's very likely that it'll be below 100, even 25 years out. So, which is such a big deal. Because it's just the global setup which is converging into...
So it's not local, it's actually more global than local.
Some quick updates. Prime Minister has entered the Lok Sabha. The cabinet meeting is over, and unless the FM starts the budget, no other minister is allowed to leave the cabinet meeting because there can't be any leaks. All exciting sort of trivia around the budget. You'll see that in just a minute or so. But before we get to that speech, we have Pranav Saita in the house. Very good morning, Mr. Saita. Great to have you here.
Same here.
And in the nick of time before the speech, so let's get your quick take on taxes. Lot of expectations, which are always there. But do you expect anything, significant to be announced today?
Nothing in this budget, in the interim budget. Maybe some swaps from an individual taxation standpoint to make the regime a little more friendly from an individual taxpayer standpoint. And some amendments to be announced, maybe in connection with international tax and BEPS, Pillar 2. That's by and large what we expect in this interim budget. Of course, the next one will be far more exciting.
Okay, so this actually sets the pace for what we are going to see. The countdown is just a few minutes from now, and let's see if we have any live visuals also coming in as we see the finance minister coming in. Last takes, gentlemen. Last takes, and let me come to you, Shankar. We should get the rating before the budget itself. Usually people wait for the end. Are you willing to give your 10 on 10 rating now in advance, or are you going to wait?
10 on 10, huh?
This government
has rated it already herself. So now, your turn.
So over the last 9 years, I have rated it around 6.
Okay.
And 6 is more on the conservatism, and 4 for not doing the things that they can do but don't do.
Okay. We started with...
Never rate a government 10. Never rate a government, because they ought to be, as you said, delivering more than what they've delivered.
No, I agree. That's not my rating.
If
but
they get satisfied, then...
it's a take, it's a dig maybe on the fact that whenever you see these ratings post-budget, everyone says 10 on 10. So
that is to please. That is to please.
It was more of a dig on that.
No, Tamanna, that is the insurance policy.
Yeah. So it was more a dig on that. Okay, let's cut across. You're seeing live visuals there.
No, I think... Yeah, I think we'll just wait for...
No, you can hear the speaker.
No, I think let's just wait for the FM to come in. But we didn't get the rating from Mihir Vora, I think. So Mihir,
pre-rating.
You want a pre-rating?
I don't predict. Right?
Yeah, you're a fund manager.
No, no forward-looking statements.
I think, do you want insurance policy?
The earlier avatar Mihir Vora, do you want an insurance policy? What do you rate?
No. I think last FY24 has been great. And look forward to some more of the same in FY25.
Okay, we go across to the Finance Minister.
Honourable Speaker, I present the Interim Budget for 24-25. The Indian economy has witnessed profound positive transformation in the last 10 years. The people of India are looking ahead to the future with hope and optimism. With the blessings of the people, when our government, under the visionary and dynamic leadership of Honourable Prime Minister Shri Narendra Modi, assumed office in 2014, the country was facing enormous challenges. With Sabka Saath, Sabka Vikas as its mantra, the government overcame those challenges in right earnest. Structural reforms were undertaken. Pro-people programs were formulated and implemented promptly. Conditions were created for more opportunities for employment and entrepreneurship. The economy got a new vigor. The fruits of development started reaching the people at scale. The country got a new sense of purpose and hope. Naturally, the people blessed the government with a bigger mandate. In the second term, our government, under the leadership of Honourable Prime Minister, doubled down on its responsibilities to build a prosperous country with comprehensive development of all people and all regions. Our government strengthened its mantra to Sabka Saath, Sabka Vikas and Sabka Vishwas. Our development philosophy covered all elements of inclusivity, namely social inclusivity through coverage of all strata of the society, and geographical inclusivity through development of all regions of the country. With the whole of nation approach of Sabka Prayas, the country overcame the challenges of once-in-a-century pandemic, took long strides towards Atmanirbhar Bharat, committed to Panch Pran, and laid solid foundations for the Amrit Kal. As a result, our young country has high aspirations, pride in its present, and hope and confidence for a bright future. We expect that our government, based on its stupendous work, will be blessed again by the people with a resounding mandate. Inclusive development and growth. Our humane and inclusive approach to development is a marked and deliberate departure from the earlier approach of provisioning up to village level. Development programs were thus provisioned. In the last 10 years, however, have targeted each and every household and individual through housing for all, Har Ghar Jal, electricity for all, cooking gas for all, bank accounts and financial services for all in record time. The worries about food have been eliminated through free ration for 80 crore people. Minimum support prices for the produce of Annadata are periodically increased appropriately. These and the provision of basic necessities have enhanced real income in the rural areas. Their economic needs could be addressed, thus spurring growth and generating jobs. Social justice Our government is working with an approach to development that is all-round, all-pervasive and all-inclusive. Sarvangin, Sarvasparshi or Sarvasamaveshi. It covers all castes and people at all levels. We are working to make India a Vikasit Bharat by 2047. For achieving that goal, we need to improve people's capability and empower them. Previously, social justice was mostly a political slogan. For our government, social justice is an effective and necessary governance model. The saturation approach of covering all eligible people is the true and comprehensive achievement of social justice. This is secularism in action, reduces corruption and prevents nepotism, prevents Bhai Bhatijawad. There is transparency and assurance that benefits are delivered to all eligible people. The resources are distributed fairly. All, regardless of their social standing, get access to opportunities. We are addressing systemic inequalities that had plagued our society. We focus on outcomes and not on outlays so that the social economic transformation is achieved. As our Prime Minister firmly believes, we need to focus on 4 major castes. They are Garib, Mahilaye, Yuva and Annadata. Their needs, their aspirations and their welfare are our highest priority. The country progresses when they progress. All 4 require and receive government support in their quest to better their lives. Their empowerment and well-being will drive the country forward. Garib Kalyan, Desh Ka Kalyan. We believe in empowering the poor. The earlier approach of tackling poverty through entitlements had resulted in very modest outcomes. When the poor became empowered partners in the development process, government's power to assist them also increases manifold. With the pursuit of Sabka Saath, in these 10 years, the government has assisted 25 crore people to get freedom from multi-dimensional poverty. Our government's efforts are now getting synergized with energy and passion of such empowered people. This is truly elevating them from poverty. Direct benefit transfer of 34 lakh crore rupees from the government using PM Jan-Dhan accounts has led to savings of 2.7 lakh crores of rupees for the government. This savings has been realized through avoidance of leakages prevalent earlier. The savings have helped in providing more funds for Garib Kalyan. PM Swanidhi has provided credit assistance to 78 lakh street vendors. From that total of 78 lakh street vendors, 2.3 lakh have received credit for the 3rd time. PM Janman Yojana reaches out to the particularly vulnerable tribal groups who have remained outside the realm of development so far. PM Vishwakarma Yojana provides end-to-end support to artisans and craftspeople engaged in 18 trades. The schemes for empowerment of Divyangs and transgender persons reflect firm resolve of our government to leave no one behind. Welfare of Annadata. Farmers are our Annadata. Every year under PM Kisan Samman Yojana, direct financial assistance is provided. Welfare of Annadata. Farmers are our Annadata. Every year under PM Kisan Samman Yojana, direct financial assistance is provided to 11.8 crore farmers, including marginal and small farmers. Crop insurance is given to 4 crore farmers under PM Fasal Bima Yojana. These, besides several other programs, are assisting Annadata in producing food for the country and for the world. Electronic National Agricultural Market has integrated 1,361 mandis and is providing services to 1.8 crore farmers with trading volume of 3 lakh crores of rupees. The sector is poised for inclusive, balanced, higher growth and productivity. These are facilitated from farmer-centric policies, income support, coverage of risks through price and insurance support, promotion of technologies and innovations through startups. Empowering the Amrit PD, the Yuva. Our prosperity depends on adequately equipping and empowering the youth. The National Education Policy 2020 is ushering the transformational reforms. PM Schools for Rising India, PM Shri, are delivering quality teaching and nurturing holistic and well-rounded individuals. The Skill India mission has trained 1.4 crore youth, upskilled and reskilled 54 lakh youth, and established 3,000 new ITIs. A large number of institutions of higher learning, namely 7 IITs, 16 triple ITs, 7 IIMs, 15 AIMS, and 390 universities have been set up. PM Mudra Yojana has sanctioned 43 crore loans aggregating to 22.5 lakh crores of rupees for entrepreneurial aspirations of our youth. Besides that, Fund of Funds, Startup India, and Startup Credit Guarantee schemes are assisting our youth. They are also becoming Rozgar Data. The country is proud of our youth scaling new heights in sports. The highest ever medal tally in Asian Games and Asian Para Games in 2023 reflects a high confidence level. Chess prodigy and our #1 ranked player Pragyananda put up a stiff fight against the reigning world champion Magnus Carlsen in 2023. Today, India has over 80 chess grandmasters compared to little over 20 in 2010. Momentum for Nari Shakti. The empowerment of women through entrepreneurship, ease of living, and dignity for them has gained momentum in these 10 years. 30 crore Mudra Yojana loans have been given to women entrepreneurs. Female enrollment in higher education has gone up by 28% in 10 years. In STEM courses, girls and women constitute 43% of enrollment, one of the highest in the world. All these measures are getting reflected in the increasing participation of women in workforce. Making triple talaq illegal, reservation of 1/3 seats for women in the Lok Sabha and state assemblies, and giving over 70% houses under PM Awas Yojana in rural areas to women, and giving over 70% houses under PM Awas Yojana in rural areas to women as sole or joint owners have enhanced their dignity. Exemplary track record of governance, development and performance. Besides delivering on high growth in terms of gross domestic product, the government is equally focused on a more comprehensive GDP, that is, governance, development and performance. Our government has provided transparent, accountable, people-centric and prompt, trust-based administration with citizen-first and minimum government, maximum governance approach. The impact of all-round development is discernible in all sectors. There is macroeconomic stability, including in the external sector. Investments are robust. The economy is doing well. People are living better and earning better, with even greater aspirations for future. Average real income of the people has increased by 50%. Inflation is moderate. People are getting empowered, equipped, and enabled to pursue their aspirations. There is effective and timely delivery of programs and of large projects. Economic management. The multi-pronged economic management over the past 10 years has complemented people-centric, inclusive development. Following are some of the major elements. 1. All forms of infrastructure, physical, digital, or social, are being built in record time. Number 2, all parts of the country are becoming active participants in economic growth. Number 3, digital public infrastructure, a new factor of production as if in the 21st century, is instrumental in formalization of the economy. Number 4, goods and services tax has enabled one nation, one market, one tax. Tax reforms have led to deepening and widening of tax base. Number 5, strengthening of the financial sector has helped in making savings, credit, and investments more efficient. Number 6, GIFT, IFSC, and the Unified Regulatory Authority, IFSCA, are creating a robust gateway for global capital and financial services for the economy. Number 7, proactive inflation management has helped keep inflation within the policy band. Now, the global context, Honourable Speaker, sir. Geopolitically, global affairs are becoming more complex and challenging with wars and conflicts. Globalization is being redefined with reshoring and friendshoring, disruption and fragmentation of supply chains and competition for critical minerals and technologies. A new world order is emerging after the COVID pandemic. India assumed the G20 presidency during very difficult times for the world. The global economy was going through high inflation, high interest rates, low growth, very high public debt, low trade growth, and climate changes. The pandemic has led to a crisis of food, fertilizer, fuel, and finances for the world, while India successfully navigated its way. The country showed the way forward and built consensus on solutions for those global problems. The recently announced India-Middle East-Europe economic corridor is a strategic and economic game changer for India and others. In the words of Honourable Prime Minister, the corridor, and I quote, will become the basis of world trade for hundreds of years to come, and history will remember that this corridor was initiated on Indian soil. unquote. Vision for Vikasit Bharat. Our vision for Vikasit Bharat is that of prosperous Bharat in harmony with nature, with modern infrastructure, and providing opportunities for all citizens and all regions to reach their potential. With confidence arising from strong and exemplary track record of performance and progress, earning Sabka Vishwas, the next 5 years will be years of unprecedented development and golden moments to realize the dream of developed India by 2047. The trinity of demography, democracy, and diversity backed by Sabka Prayas has the potential to fulfill aspirations of every Indian. As Honorable Prime Minister in his Independence Day address to the nation mentioned, I quote, "There is no dearth of opportunities, as many opportunities as we want. The country is capable of creating more opportunities. Sky is the limit," unquote. Strategy for Amrit Kal. Our government will adopt economic policies that foster and sustain growth, facilitate inclusive and sustainable development, improve productivity, create opportunities for all, help them enhance their capabilities, and contribute to generation of resources to power investments and fulfill aspirations. Guided by the principle, reform, perform, and transform, the government will take up next generation reforms and build consensus with the states and stakeholders for effective implementation. It is an important policy priority for our government to ensure timely and adequate finances, relevant technologies, and appropriate training for the micro, small, and medium enterprises, MSMEs, to grow and also compete globally. Orienting the regulatory environment to facilitate their growth will be an important element of this policy mix. Aligning with the Panchamrit goals, our government will facilitate sustaining high and more resource-efficient economic growth. This will work towards energy security in terms of availability, accessibility, and affordability. For meeting the investment needs, our government will prepare the financial sector in terms of size, capacity, skills, and regulatory framework. Aspirational Districts Program. Our government stands ready to assist the states in faster development of aspirational districts and blocks, including generation of ample economic opportunities. Development of the East. Our government will pay utmost attention to make the eastern region and its people a powerful driver of India's growth. PM Awas Yojana Gramin. Despite the challenges due to COVID, implementation of PM Awas Yojana Gramin continued, and we are close to achieving the target of 3 crore houses. 2 crore more houses will be taken up in the next 5 years to meet the requirement arising from increase in the number of families. Rooftop solarization and Muft Bijli. Through rooftop solarization, 1 crore households will be enabled to obtain up to 300 units free electricity every month. This scheme follows the resolve of Honorable Prime Minister on the historic day of consecration of Sri Ram Mandir in Ayodhya. Following benefits are expected. Savings up to 15 to 18,000 rupees annually for households from free solar electricity and selling the surplus to the distribution companies. Charging of electric vehicles. Entrepreneurship opportunities for a large number of vendors for supply and installation. Employment opportunities for the youth with technical skills in manufacturing, installation, and maintenance. Housing for middle class. Our government will launch a scheme to help deserving sections of the middle class, and I quote from Honorable Prime Minister's words, living in rented houses or slums or chawls and unauthorized colonies, unquote, to buy or build their own houses. Medical colleges. Several youth are ambitious to get qualified as doctors. They aim to serve our people through improved healthcare services. Our government plans to set up more medical colleges by utilizing the existing hospital infrastructure under various departments. A committee for this purpose will be set up to examine the issues and make relevant recommendations. Cervical cancer vaccination. Our government will encourage vaccination for girls in the age group of 9 to 14 years for prevention of cervical cancer. Maternal and child health care. Various schemes for maternal and child care will be brought under one comprehensive program for synergy in implementation. Upgradation of Anganwadi centers under Saksham Anganwadi and Poshan 2.0 will be expedited for improved nutrition delivery, early childhood care and development. The newly designed U-Win platform for managing immunization and intensified efforts of Mission Indradhanush will be rolled out expeditiously throughout the country. Ayushman Bharat. Healthcare cover under Ayushman Bharat scheme will be extended to all ASHA workers, to all Anganwadi workers and helpers. Agriculture and food processing. The efforts of value addition in agriculture sector and boosting farmers' incomes will be stepped up. Pradhan Mantri Kisan Sampada Yojana has benefited 38 lakh farmers and generated 10 lakh employment. Pradhan Mantri Formalization of Micro Food Processing Enterprises Yojana has assisted 2.4 lakh SHGs and 60,000 individuals with credit linkages. Other schemes are complementing the efforts for reducing post-harvest losses and improving productivity and incomes. For ensuring faster growth of the sector, our government will further promote private and public investment in post-harvest activities, including aggregation, modern storage, efficient supply chains, primary and secondary processing and marketing and branding. Nano DAP. After the successful adoption of nano urea, application of nano DAP on various crops will be expanded in all agroclimatic zones. Atmanirbhar Oil Seeds Abhiyan. Building on the initiative announced in 2022, a strategy will be formulated to achieve Atmanirbharta for oil seeds such as mustard, groundnut, sesame, soya bean, and sunflower. This will cover research for high-yielding varieties, widespread adoption of modern farming techniques, market linkages, procurement, value addition, and crop insurance. Dairy development. A comprehensive program for supporting dairy farmers will be formulated. Efforts are already on to control foot and mouth disease,
India is the world's largest milk producer with but with low productivity of milch animals. The program will be built on the success of existing schemes such as Rashtriya Gokul Mission, National Livestock Mission, and infrastructure development funds for dairy processing and animal husbandry. Matsya Sampada. It was our government which set up a separate department for fisheries, realizing implementation of Pradhan Mantri Matsya Sampada Yojana will be stepped up to 1. Enhance aquaculture productivity from existing 3 to 5 tons per hectare. 2. Double exports to 1 lakh crore rupees, and 3. Generate 55 lakh employment opportunities in the near future. 5 integrated aqua parks will also be set up. Lakpati Didi. 83 lakh SHGs. 83 lakh SHGs with 9 crore women. 83 lakh SHGs. 83 lakh SHGs with 9 crore women are transforming rural socio-economic landscape with empowerment and self-reliance. Honorable Speaker sir, their success has assisted nearly 1 crore women to become Lakpati Didi already. They are an inspiration to others. Their achievements will be recognized through honoring them. Buoyed by the success, it has been decided to enhance the target for Lakpati Didi from 2 crores to 3 crores. Technological changes, new age technologies and data are changing the lives of people and businesses. They are also enabling new economic opportunities and facilitating provision of high-quality services at affordable prices for all, including those at the bottom of the pyramid. Opportunities for India at the global level are expanding. India is showing solutions through innovation and entrepreneurship of its people. Research and innovation for catalyzing growth, employment, and development. Prime Minister Lal Bahadur Shastri gave the slogan of Jai Jawan, Jai Kisan. Prime Minister Atal Bihari Vajpayee ji, made that Jai Jawan, Jai Kisan, Jai Vigyan. Prime Minister Modi has furthered that to Jai Jawan, Jai Kisan, Jai Vigyan, and Jai Anusandhan, as innovation is the foundation of development. For our tech-savvy youth, this will be a golden era. A corpus of 1 lakh crore rupees will be established with 50-year interest-free loan provided. The corpus will provide long-term financing or refinancing with long tenors and low and or nil. I repeat that sentence. The corpus will provide long-term financing or refinancing with long tenors and low or nil interest rates. This will encourage the private sector to scale up research and innovation significantly in sunrise domains. We need to have programs that combine the powers of our youth and technology. A new scheme will be launched for strengthening deep tech technologies for defense purposes and expediting Atmanirbharta. Infrastructure development. Building on the massive tripling of the capital expenditure outlay in the past 4 years, resulting in huge multiplier impact on economic growth and employment creation, the outlay for the next year is being increased by 11.1% to 11,11,111 crore rupees. This would be 3.4% of our GDP. Railways. 3 major economic railway corridor programs will be implemented. These are energy, mineral and cement corridor. Number 2, port connectivity corridors. And number 3, high traffic density corridors. The projects have been identified under the PM Gati Shakti for enabling multimodal connectivity. They will improve logistics efficiency and reduce cost. The resultant decongestion of the high traffic corridors will also help in improving operations of passenger trains. 3 economic corridor programs will accelerate our GDP growth and reduce logistic costs. 40,000 normal rail bogies will be converted to Vande Bharat standards to enhance safety, convenience and comfort of passengers. Aviation sector. The aviation sector has been galvanized in the past 10 years. Number of airports have doubled to 149. Rollout of air connectivity to Tier 2 and Tier 3 cities under Udan scheme has been widespread. 517 new routes are carrying 1.3 crore passengers. Indian carriers have proactively placed orders for over 1,000 new aircrafts. Expansion of existing airports and development of new airports will continue expeditiously. Metro and Namo Bharat. We have a fast expanding middle class and rapid urbanization is taking place. Metro rail and Namo Bharat can be the catalyst for the required urban transformation. Expansion of these systems will be supported in large cities, focusing on transit-oriented development. Green energy. Towards meeting our commitment for net zero by 2070, the following measures will be taken. Viability gap funding will be provided for harnessing offshore wind energy, potential for initial capacity of 1 gigawatt. Coal gasification and liquefaction capacity of 100 metric tons will be set up by 2030. This will also help in reducing imports of natural gas, methanol and ammonia. Phased mandatory blending of compressed biogas in compressed natural gas for transport and piped natural gas for domestic purposes will be mandated. Financial assistance will be provided for procurement of biomass aggregation machinery to support collection. Electric vehicle ecosystem. Our government will expand this and strengthen the e-vehicle ecosystem by supporting manufacturing and charging infrastructure. Greater adoption of e-buses for public transport networks will be encouraged through payment security mechanism. Biomanufacturing and biofoundry. For promoting green growth, a new scheme of biomanufacturing and biofoundry will be launched. This will provide environment-friendly alternatives such as biodegradable polymers, bioplastics, biopharmaceuticals, and bioagri inputs. This scheme will also help in transforming today's consumptive manufacturing paradigm to the one based on regenerative principles. Blue Economy 2.0. For promoting climate resilient activities for Blue Economy 2.0, a scheme for restoration and adaptation measures and coastal aquaculture and mariculture with integrated and multi-sectoral approach will be launched. Comprehensive development of tourist centers. The success of organizing G20 meetings in 60 places presented diversity of India to global audience. Our economic strength has made the country an attractive destination for business and conference tourism. Our middle class also now aspires to travel and explore. Tourism, including spiritual tourism, has tremendous opportunities for local entrepreneurship. States will be encouraged to take up comprehensive development of iconic tourist centers, branding and marketing them at global scale. A framework for rating of the centers based on quality of facilities and services will be established. Long-term interest-free loans will be provided to states for financing such development on matching basis. To address the emerging fervor for domestic tourism, Honorable Speaker, sir, projects for port connectivity, tourism infrastructure and amenities will be taken up on our islands, including Lakshadweep. This will help in generating employment also. Promoting investments. The FDI inflow during 2014 to 23 was $596 billion, marking a golden era. That is twice the inflow during 2005 to 14. For encouraging sustained foreign investment, we are negotiating bilateral investment treaties with our foreign partners in the spirit of First Develop India. FDI is First Develop India. Reforms in the states for Vikasit Bharat. Many growth and development enabling reforms are needed in the states for realizing the vision of Vikasit Bharat. A provision of 75,000 crore rupees as 50-year interest-free loan is proposed this year to support those milestone-linked reforms by the state governments. Societal changes. The government will form a high-powered committee for an extensive consideration of the challenges arising from fast population growth and demographic changes. The committee will be mandated to make recommendations for addressing these challenges comprehensively in relation to the goal of Vikasit Bharat. Amrit Kal as Kartavya Kal. Our government stands committed to strengthening and expanding the economy with high growth and to create conditions for people to realize their aspirations. Honorable Prime Minister, in his Independence Day address to the nation in the 75th year of our Republic, said, and I quote, "We commit ourselves to national development with new inspirations, new consciousness, new resolutions as the country opens up immense possibilities and opportunities. It is our Kartavya Kal." Unquote. Every challenge of the pre-2014 era was overcome through our economic management and our governance. These have placed the country on a resolute path of sustained high growth. This has been possible through right policies, true intentions, and appropriate decisions. In the full budget in July, Honourable Speaker, our government will present a detailed roadmap for our pursuit of Vikasit Bharat. Revised estimates of 2023-24. The revised estimate of the total receipts other than borrowings is 27.56 lakh crores of rupees, of which the tax receipts are 23.24 lakh crore rupees. The revised estimate of total expenditure is 44.90 lakh crore rupees. The revenue receipts at 30.03 lakh crore rupees are expected to be higher than the budget estimate, reflecting strong growth momentum and formalization in the economy. The revised estimate of the fiscal deficit is 5.8% of GDP, improving on the budget estimate, notwithstanding moderation in the nominal growth estimates. Budget estimates for 2024-25. Coming to the year 2024-25, the total receipts other than borrowings and total expenditure are estimated at 30.80 and 47.66 lakh crore rupees respectively. The tax receipts are estimated at 26.02 lakh crore rupees. The scheme of 50-year interest-free loan for capital expenditure to states will be continued this year with an outlay of 1.3 lakh crore rupees. We continue on the path of fiscal consolidation, as announced in my budget speech of 2021-22, to reduce fiscal deficit below 4.5% by 25-26. The fiscal deficit in 2024-25 is estimated to be 5.1% of GDP, adhering to that path. So the gross and net market borrowings through dated securities during 24-25 are estimated at 14.13 lakh crore rupees and 11.75 lakh crore respectively. Both will be less than that in 23-24. Now that the private investments are happening at scale, the lower borrowings by the central government will facilitate larger availability of credit for the private sector. Vote on account. I'll be seeking vote on account approval of the Parliament through the appropriation bill for a part of the financial year 2024-25. I will now move to Part B. Honourable Speaker, sir, over the last 10 years, the direct tax collections have more than trebled and the return filers swelled 2.4 times. I would like to assure the taxpayers that their contributions have been used wisely for the development of the country and welfare of its people. I appreciate the taxpayers for their continued support. The government has reduced and rationalized tax rates. Under the new tax scheme, there is now no tax liability for taxpayers with income up to 7 lakh rupees, up from 2.2 lakh rupees in the financial year 2013-14. The threshold for presumptive taxation for retail businesses was increased from 2 crores to 3 crores. Similarly, the threshold for professionals eligible for presumptive taxation was increased from 50 lakh rupees to 75 lakh rupees. Also, corporate tax rate was decreased from 30% to 22% for existing domestic companies and to 15% for certain new manufacturing companies. Honourable Speaker, sir, in the last 5 years, our focus has been to improve taxpayer services. The age-old jurisdiction-based assessment system was transformed with the introduction of faceless assessment and appeal, thereby imparting greater efficiency, transparency, and accountability. Introduction of updated income tax returns, a new Form 26AS, and pre-filling of tax returns have made filing of tax returns simpler and easier. Average processing time of returns has been reduced from 93 days in the year 2013-14 to a mere 10 days this year, thereby making refunds faster. Indirect taxation. By unifying the highly fragmented indirect tax regime in India, the GST has reduced the compliance burden on trade and industry. The industry has acknowledged the benefits of GST. According to a recent survey conducted by a leading consulting firm, 94% of industry leaders view the transition to GST as largely positive. According to 80% of the respondents, it has led to supply chain optimization, as elimination of tax arbitrage and octroi has resulted in disbanding of checkposts at the state and city boundaries. At the same time, tax base of GST more than doubled, and the average monthly gross GST collection has almost doubled to 1.66 lakh crores this year. States too have benefited. States' SGST revenue, including compensation released to states in the post-GST period of 2017-18 to 2022-23, has achieved a buoyancy of 1.22. In contrast, the tax buoyancy of state revenues from subsumed taxes in the pre-GST four-year period of 2012-13 to 2015-16 was a mere 0.72. The biggest beneficiaries are consumers, as reduction in logistic cost and taxes have brought down prices of most goods and services. We have taken a number of steps in customs to facilitate international trade. As a result, the import release time declined by 47% to 71 hours at inland container depots, by 28% to 44 hours at air cargo complexes, and by 27% to 85 hours at seaports over the last 4 years since 2019, when the national time release studies were first started. Tax proposals. As for tax proposals, in keeping with the convention, I do not propose to make any changes relating to taxation and propose to retain the same tax rates for direct and indirect taxes, including import duties. However, certain tax benefits to startups and investments made by sovereign wealth or pension funds, as also tax exemption on certain income of some IFSC units, are expiring on 31/3/2024. To provide continuity in taxation, I propose to extend the date to 31/3/2025. Moreover, in line with the government's vision to improve ease of living and ease of doing business, I wish to make an announcement to improve taxpayer services. There are a large number of petty, non-verified, non-reconciled or disputed direct tax demands, many of them dating as far back as 1962, which continue to remain on the books, causing anxiety to honest taxpayers and hindering refunds of subsequent years. Honourable Speaker, sir, I propose to withdraw such outstanding direct tax demands up to 25,000 rupees pertaining to the period up to financial year 2009-10 and up to 10,000 rupees for financial years 2010-11 to 2014-15. This is expected to benefit about 1 crore taxpayers. 1 crore taxpayers would benefit out of this. Economy then and now. In 2014, when our government assumed the reins, the responsibility to mend the economy step by step and to put the governance systems in order was enormous. The need of the hour was to give hope to the people, to attract investments, and to build support for the much-needed reforms. The government did that successfully, following our strong belief of nation first. The crisis of those years has been overcome, and the economy has been put firmly on a high, sustainable growth path with all-round development. It is now appropriate to look at where we were then. I repeat, it is now appropriate to look at where we were then till 2014 and where we are now, only for the purpose of drawing lessons from the mismanagement of those years. The government will lay a white paper on table of the House. The exemplary track record of governance, development and performance, effective delivery and Jan Kalyan has given the government trust, confidence and blessings of the people to realize whatever it takes. The goal of Vikasit Bharat with good intentions, true dedication and hard work in the coming years and decades. With this, Honourable Speaker, I commend the interim budget to this august House. Jai Hind.
Item number 2, Srimati Nirmala Sitharaman ji.
So, with your permission, I rise to lay on the table the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management Act 2003, Medium-Term Fiscal Policy cum Fiscal Policy Strategy Statement and Macroeconomic Framework Statement.
Item number 3, Srimati Nirmala Sitharaman ji.
Sir, with your permission, I rise to move for leave to introduce the Finance Bill 2024.
प्रश्न ये है कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें, मेरे विचार में निर्णय हाँ वालों के पक्ष हुआ, हाँ वालों के पक्ष हुआ। माननीय मंत्री जी विधेयक को पुनर्स्थापित करें।
So I introduce the bill.
सभा की कार्रवाई शुक्रवार दिनांक 2 फरवरी 2024 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है।
All right. Well, a few surprises. If people thought it was an interim budget, it was only in the length of the budget speech, because otherwise some of the announcements that have come out are stellar, and we'll talk about it editorially and then get in our guests to talk about this. But I think what stood out amidst all the assumptions that they've made around receipts, tax receipts and expenditures for FY24, the budgeted actual numbers, and for FY25, I think the standout announcement is fiscal deficit as a percentage of GDP for FY25 at 5.1%. I must say, guys, nobody thought about this when they were penciling their estimates.
The base case was 5.2 at best.
At best,
at
maybe
best.
5.3.
Even the net borrowing, and I think the bond markets have reacted, not significantly yet. The rupee is sub 83, so that's a good thing. Bonds have gone down about 7 basis points, so not a big move on the bond market, but it will play out. Banking stocks as well should be in focus zone.
Yes. So top takeaways, if we had to put it, and Neeraj is absolutely right. Fiscal deficit targets are better than expected. She's sticking to 4.5% for FY26, no moving from there. For the current year, it's below what the government had projected. They projected 5.9. It's at 5.8%. And remember, for the interim year, how do you get to that 4.6 or 4.5%? Well, the figure she's given is 5.1%. The estimate was between 5.1 to 5.3. Borrowings are lower than expected in FY25. Revenue receipts are higher than expected in FY24, and no changes in tax.
Just a quick one on capex.
That's what I'm saying.
Big jump.
Expenditure.
11% odd is better than 10% is what the street was penciling, working with. The number that she's given out is 11.1% increase in capex. So that number looking far better. And I think the street infrastructure, the sectors that we've been talking about, railways, will see a rally. And we've seen that play out in the last few days, last few minutes. Yeah. Another smaller sector, and I know I talked about this earlier in the day, and I didn't really think much was going to come out, was tourism. Those counters also getting excited. So clearly things are working and on track in terms of what the expectation was. But Neeraj, Tamanna, surprising, I think the equity market would start seeing some buying into a bit of a runaway. Nothing's happened on the street.
Well, I think the capex outlay being lower is something that doesn't work.
11.
Yeah, but relative to 30%.
11%.
Yeah, but relative to 30%.
It's a 10% jump.
It's 11.1% uptake relative to previous year. But the point being, because of the previous 3 years, and Mihir Vora was with us in the panel, he was saying that anything below 20% might be something that might be disappointing for the market because they're used to 30-odd%.
Even I think Citibank's report was exactly that. We're working with 20%.
So multiple things have happened, right? And our guests should be with us any moment and we should talk to them. But maybe, one, the 5.8 trending number, and two, the 5.1 confidence comes from these three things. Capex outlay not very high, 11.1. Receipts much better. And the gross borrowing number, 14.1 lakh crores. It is much, much lower. Pranjul Bhandari was on record saying that any number lower than 15.2 or 15.1 is going to be viewed positively. And I think that is what has happened.
Back to the story of the fact that we've made these commitments, right? You've talked, and also talking about GDP, fiscal deficit, she said below 4.5.
Yeah.
Not even 4.6 and not even
very positive there.
With a lot of conviction, it's going to be below 4.5. And also what was probably a way to look at it, not too many populist measures as such.
Yes,
that could also be viewed in correct light. Some disappointment on the tax front. There were, I guess, units of people expecting a little bit of tweaking on taxation, but like Mihir and me discussed this earlier, no tweaking on taxation.
And which is also great news.
But
well, people would like it. But let's tweaking. No, we don't want negative taxation. But just before we get to our guests, a quick market check. So the Sensex and the Nifty are flattish. On the index, not too much of a movement really because of the budget, if you will. On the index heavyweights I'm talking about. So autos still higher and doing okay. And that continues. So the Marutis, M&Ms of the world, no big moves there or no big developments there. But I'm just saying that the moves on the index are largely muted because the Sensex and the Nifty, in fact, now 0.22%. So kind of reeling a bit under pressure. Now, if we have our guests ready, we should go to our guests and try and get initial views from all of them. Let me start with, to my extreme left, Manish. Quick initial thoughts. What did you make of the numbers?
So it's a as we said ahead of the budget, it's going to be a bond budget. So it's a disinflation budget. Basically, the expenditure is going up only at 6%, lower than even what I thought, 7-odd%. Primary expenditure is even lower, which is ex subsidy, ex interest is likely at 4-5%, one of the lowest in last 20 years. Fiscal deficit is actually versus market expectation of 5.3, 5.4, it's 5.1. So it's sort of paving way for a pivot for monetary policy. That look, we've done enough. Capex, there's been a substantial jump. So let's sort of get into a little bit of a conservative mode now, so that we pave way for monetary policy to ease. AMIs can come off, liquidity can improve. So in a sense, the onus of actually re-stimulating growth at margin, if at all they were to be slowed down, is going to be with monetary policy, not fiscal. So if purely from the point of view of, let's say, if you're looking for a growth budget, it's not a growth budget. It's a disinflation budget, and which essentially is going to be for long-term, medium-term, very good, because government has done a lot of things. There is going to be disappointment in terms of like market expectation on capex was about 14-15%. I was actually thinking of only 11-12%, so not disappointed because I mean, even this year, there's a 75,000 crore worth of shortfall in terms of total capex spend so far that they've done. So it's 11% is a decent number. 3.4% as a percentage of GDP is not going to rise. A lot of people were thinking that it will rise to 4% of GDP in terms of capex. I think we've sort of hit a ceiling there. And this is all the capacity of the government is right now. So I think incrementally, the pivot will be back to a 2016-18 regime, where you'll have a 4.5% fiscal deficit in 1 or 2 years' time. And then, you know, mostly the local household and the private sector actually sort of re-stimulating or helping economy grow, instead of, you know, government pushing it through capex.
Do you think the onus now will be on the RBI when they meet for the next policy meet? So I think that will be more directional in nature then.
That's the beauty of this, you know, the SKD and Modi tango, so to say, I kind of call it, because, you know, unlike the previous regimes, you know, these guys tango very well. So far it was Fisc, and then now sort of the Fisc is withdrawing so that monetary policy can actually accommodate.
Okay, Rajiv Anand is also joining us now on our first quick takes of the budget. Rajiv Anand, Deputy MD, Axis Bank, with us. Very good afternoon to you, Rajiv. The conversation in here saying that it is not a growth budget, but positive on all the key factors. Your fiscal deficit targets matched for this year, better than expected. Capex at 11%, maybe lower than what the street wanted, but you're showing a continuum of growth. What's your first take?
I think I don't want to get into the semantics on whether this is a growth budget or not, but I think clearly shows the intent that the fiscal deficit is going to be managed as we get into the next 5 years as well, which is fantastic. And I think you're already seeing the fact that where the market is expecting fiscal deficit at about 5.4%, 5.1% for next year is a pleasant surprise. And I think if you look at the fiscal arithmetic as well, I think it's quite credible at this point in time. We've already seen the 10-year bond yields rally about 10 basis points on the back of that. I did hear some conversation around allocation to capital expenditure. I think capital expenditure increase is higher than the overall increase in expenses, which I think is positive again. I would have expected a little more on creating more demand at the rural level, not just, more importantly, creating more rural income, but perhaps that is there in the details, and maybe we can figure this out as we go forward. But I think overall, a budget that I think one should be quite satisfied with.
Yeah. Rajiv, just a quick follow-up in terms of the borrowing figure and the point that the finance minister also made, that there is going to be a curtailment in government borrowing better than what the street and the broad expectations are, to be able to give enough room for the private sector. Do you think that is now expected to play out? Are you happy with that number?
I think, like I said to you, the fiscal arithmetic is credible. And so therefore, by definition, the expectation in terms of the gross borrowing program, approximately in the vicinity of about 14 lakh crores, I think is something that the markets are quite comfortable to work with as we get into 24-25. We are certainly we are certainly seeing private capex has kicked in over the last 8 to 12 quarters. One of the things that's certainly happening is the fact that because of the fact that corporate cash flows have been quite strong, much of this private capex has been funded by internal accruals. Not so good as the head of a corporate bank, but I think it just is symptomatic of what a solid state corporate balance sheets are at this point in time. And perhaps looking at this budget, and once we get the uncertainty of the elections out of the way, I think it's fair to expect that corporate India will push the pedal on private capex as we go forward.
Rajiv, just a quick follow-up on what you said. So net borrowing numbers come in lower than expected. You've got that 25 billion that's going to come our way on back of India's inclusion in the JPM. In terms of, and of course, you've got the onus now shifted to the RBI through a monetary policy measure in the next meeting. In terms of outlook or trajectory on the 10-year, what are you working with? We've already seen a 9 basis point movement, like you said, was an instant knee-jerk reaction for now.
I think if you look at the curve is very flat at the moment. I mean, overnight funding rate is at 675. The 10-year is close to 712, 713 at this point in time. I think the focus for all bankers is really to see, when the funding rates at the short end will begin to ease, which will bring down the short end of the curve from overnight to, let's say, up to 5 years, down at this point in time. Liquidity in the system is quite tight, and as a result of that, you've already seen the fact that funding rates or cost of funds for banks has certainly gone up. That has certainly put some pressure on NIMs, for banks. And I think as banks, not so much about the 10-year, but I think the focus is to see when liquidity in the system will come back. I do hope that perhaps once the first rate cut in the US happens, and two is when the flows of money, thanks to the JP Morgan index inclusion, happens sometime in June, we will see some easing of liquidity. So really the focus of attention is around liquidity. I think there isn't that much space for the 10-year to move at this point in time.
Right. By the way, just want to mark that the EY think tank is with us in our studios and giving us all the intelligence, and it'll be up on your screen as well. In moments from now, we'll speak to Pranav Sehta as well and get his view too. But Rajiv, just one quick question before Shankar comes in with a question too. I heard you mention that the state capex has been strong. For some people, that's been the story of FY24, if you will, a 40% uptick there. Could that play a part in ensuring that the capex momentum stays high? Because not that the central government has anyways lived up to the whole amount of the capex that was